wise man once said, "The will to win, the desire." A wise man once said, "The will to win, the desire to succeed,
What takes guts is to put yourself on the line.
the urge to reach your full potential.
A leader makes the way.
These are the keys that will unlock the door to personal excellence. Success Resources is the world's leading events promoter of business, personal development, and wealth creation programs. For over 30 years, we've helped over 10 million people across 30 countries unlock their full potential. From North America to Europe to Africa to Asia to Oceania, we are the key to your personal success. We open the door to the world's best speakers such as Anthony Robbins, Sir Richard Branson, Robert Kiyosaki, and T. Harv Eker, to name a few. We have over 500 events a year and access to the greatest thinkers, achievers, and motivators of our time. We guide you to the success that lies in every one of us.
But you will not discover your greatness in your comfort zone.
We have never really truly reached our destination. There's always another level to strive for. Your best is yet to come. Success Resources, your learning partners.
Hi, everybody. Can you hear me? Hello, hello. Good morning, good afternoon, good evening, wherever you are all around the world. Hey, I just want to wish everybody a happy stay home. It's a Sunday. We are all in lockdown. So, and anyway, it's a good chance for us to stay at home and learn something from Sandy. So, greeting from Success Resources. My name is Nikki. And on behalf of Success Resources and Sandy Jadeja, I would like to warmly welcome you to the Fast Profit Swing Trading Part 1. Okay, so are you ready to learn and enjoy the class for today? Cool. So it's my pleasure to welcome you to your instructor, Sandy Jadeja. It's not every day that you will find an instructor that is so brilliant in knowledge and also have an effective way to communicate with people. I believe that those people who have been with him, who has been his student, know how good a communicator, how good an instructor he is. And Sandy need no introduction, okay? Because he's so fully known for his knowledge in the financial industry and is the best in what he does. So, ladies and gentlemen, help me welcome Sandy Jadeja. Over to you, Sandy.
Great. Thank you, Nikki. Okay, let's get started. Okay, welcome to everybody. And I just want to say thank you to Success Resources, who's been working effortlessly behind the scenes, just 24 hours a day. A lot of people don't understand how much work has really been put into this particular program. Now, just earlier on this morning, I was actually having a conversation with my mother, and it all started when she saw something on the news. It was yesterday, and they were showing how in South Africa the situation is actually quite bad when it comes to how the military and the police are dealing with people on the street. And it really kind of makes you think of, in some countries, people are pulling together. In other countries, it's just causing a division between people. These are really challenging times, I think, for a lot of people around the world. You know, just in a matter of a few weeks, just the whole world has changed the way they communicate, the way they do business. And I've said so many times that when we approach 2017, when we approach the year 2019, there are some really huge shifts that are happening. And this has nothing to do with the end of the world or Mayan prophecies. We've all been through that, you know, we continue to go on. It's just that the way we do business and the way we interact in life is going to change, just like how mobile phones have changed the way we communicate, just like how the internet has changed things. This is just one of those periods of times where we are now seeing things change in a very, very, very big way. And even companies like Success Resources, who I'm quite happy to say this, the way that they've shifted almost overnight in finding ways to stay in touch and communicate with their participants. It's just incredible how a lot of companies are having to do this. So today, the objective is to get you to try to blend into how things are probably going to change in the next 1.5 to maybe 2 years. All of us, I think, the way we're going to have to communicate, it's really been pushed towards the online area. And I'm not going to go into reasons why I think that's a bad thing. When I meet you in person, then I will definitely tell you the reasons why I think that there's limitations to what's actually happening right now. So let's start with this question. What if I could? A couple of years ago, I think it was around 2005, I was speaking in New York and then Vegas, and a colleague of mine, Damien, we launched this question: if I could, I would. And we plastered that onto a board and put it outside into Times Square in New York City. And in less than 24 hours, there were literally thousands of people who had put, if I could, I would. And then they put their answer. So, for example, if I could, I would leave my job. If I could, I would travel. And it's just interesting because how things have changed in just over the last 3 weeks, so 4 weeks, when a relative of mine, my mum's brother, my uncle, he got to a situation where he said the whole work situation for him was slowing down. And he works for a company called Addison Lee and then also part time Uber. So he said that with this whole COVID-19 situation, things have really slowed down. In fact, when I came back from Malaysia just a few weeks, 3 weeks ago, the driver from Addison Lee who picked me up had said that he has no idea what to do because the government had announced that parents are going to have to stay home with their children. And he just didn't know how he was going to earn a living with this whole thing coming to a halt. So with my uncle, I said to him that, look, if you pay me a small fee, I'm not going to do it for free because I've done things for him in the past for free and nothing comes out of it. So I said, if you pay a small fee, I can assure you that it'll be worth your time. So I just spent this, I think about an hour and a half. It wasn't even that long with him and just showed him a very few basic things. And it was quite amazing in terms of the results that he achieved. Now, you've got to understand one thing. He was hungry. He was in a position where he had to make the money. There was just no other choice for him. And I shared those results with you over the last 1 or 2 webinars that we did. And then I actually taught somebody else, a lady in South Africa, South Africa, it was in Singapore. And her results were stunning. But again, she's in a position where she's really hungry. And after the webinar that Success Resources held, I had a number of people saying, I want to be your experiment. Why don't you try this on me? And you always get, there's this minority of negative people who just won't believe it. And it was at that point I thought, why would I even mention this? What's the point if I share this with people and they don't believe it? There's no point. And that's why I kept repeating the Paulo Coelho quote at most of the talks that I do for Success Resources, that when you possess great treasures within you and you try to tell others of them, seldom are you believed. And so it's a very sticky situation that when you do show somebody something which is very, very simple, very powerful, usually the first reaction is, it's too good to be true. Okay. So today, let's start with this question. What if you could learn something which is really simple? What if you could learn something that you could apply immediately? What if you could do this from home? What if you could get very good results? And what if this could change the way that you think about what you're going to do in the coming 1 to 2 years, or possibly even longer than that? So those are questions that you have to answer yourself. Those of you that had sent some video testimonials, firstly, just want to say thank you so much. Some of them were funny, some of them were very emotional, some of them were tear jerkers, some of them were a little bit crazy. But thank you so much for sharing those. There was one video came in from a lady called Katie, really lovely lady. I hope she's on today. And she said she studied economics in university. And what she'd just learned from a class that I did, I think it was last year, Fast Profits Trading Strategies, which is a 2-day workshop. And she said, what I learned at university and what I've learned in here is two completely different things. So in the world of finance, which I've been involved in, I think it's coming up to almost 36 years now, I just find that they complicate things way too much, and that the average person gets put off because they think it's too complicated. They think that you need a lot of money. The other day, I was talking to another friend of mine, Helen, who I've known for years. She's actually my hairdresser, which I'm desperate to see right now because the longer I stay in here, I'm just going to end up looking like Boris Johnson. So she rang me and said, how's everything? I said, fine. And we got into this conversation and I said, oh, we had this really great webinar and over 8,500 people were trying to get onto the webinar. And she said, I could never do what you're doing, sitting there all day, watching a screen and just trying to make money. And I kept trying to tell her that it doesn't have to be that way. That's the perception that she has. And it really doesn't need to be that way. You can choose to do that, but you can actually just choose different ways. And if you decide to sit and watch a screen all day, great, okay. If you decide to just say, I only want to do this part-time, that's okay. The good thing about financial markets is that you can choose the way you want to trade and how many hours you want to spend. So that's all up to you. And today's program, it is about watching the screen. It is about being involved. And it's about trying to get as much money as possible in the current environment. Okay. So let's try and figure out what's the best thing that you could do given the current situation. Now, it's the way we look at the scenery that needs changing and not the scenery itself. And that's by a wonderful philosopher, Tycho. Right now, the scenery doesn't look very promising for a lot of people. I kid you not, in just the last, what are we today? Sunday, the last 3 days, it was actually since late Thursday, I got phone calls and messages from friends I haven't spoken to in years. And these are people who I classify as friends, and they are calling me to say, can I help them to make money? So I said, look, guys, I haven't heard from you for such a long time. And now you're calling me at this time to assist you. And I said, look, friends, yes, but the subject of money, not really interested. And some of them got offended. The thing is, things are going to change. They already have started to change. My brother is a doctor. He works in the hospital and I hardly see him because he's just full on right now. He's very, very busy, obviously, with the situation that's going on. So instead of saying to ourselves, look, it's really bad out there, there's a lot of jobs that's going to go, and maybe you're a person that's going to be impacted by that, why not ask the question to say, things are going to change. What do I need to do to adapt? And that's a question not a lot of people are asking. We've been through these situations before where we've had to adapt. And this is no different to previous situations when it comes to adaptation. So we will have to look at things in a very, very different way right now. So I'm hoping that today it gives you an insight as to why I think that trading should be, if not a primary, at least a secondary skill. Learn it. It doesn't take much. It's not that difficult. And at the same time, it's not that easy. there's this borderline between what is simple, what is easy. And that's what I'm hoping to do today. That if I can show you something so simple, we actually don't need 3 hours. We really don't. But because I said that we're going to have 3 to 4 hours, I've got to now spend all this time with you, taking you step by step and trying to get you to understand that this is not as difficult as it seems. Now, the reason I ask people to fill out the survey is so that I know how best to serve you, how best to give you information where there's a balance. So when we got the survey, there's a vast majority of people who haven't traded, who I'd say a good 85% are absolute beginners. There's about 3% who are professionals, and there's around 12% who are experienced. So there's a completely different mixed bag here. So I'm going to make sure that I cover all aspects of this. Now, this is called the Daily Income Trading Program. And basically what we're trying to do is just to use really simple trading strategies for market volatility. And that's really important to understand, that these techniques are working right now. Does it mean that it won't work in the next week to 2 weeks? No, they keep working. It's just that the results will change. And I'll explain that as we go through this presentation. Tiff, what are we trying to do? I don't know. I don't know what it is that you want to do. And even though you're all on mute, I can hear that one word, money. I want to make money. I get that. But we have to go beyond that. What are we trying to do? Me personally, I'm trying to get you to understand a skill set. I'm trying to get you to learn something which is your backup plan. By the way, thank you so much for all the birthday wishes. It's not my birthday, not yet. It's coming. So for me, I'm 54 years old. I am not worried about what's going to happen in the economy on a personal level because it doesn't impact me. This is the best time for us in the financial markets because we see volatility. So that means it gives us more opportunities. But I am busy. I mean, I'm extremely busy on my consultancy side where I get companies calling in saying, look, we need your assistance. We need market reports. We need to understand where you see the market going. What are your expectations in terms of the volatility, the technology? How do we change here? So in that area, I'm really, really, really busy. And so my objective is to get you so that if this happens again, that you're not going to become a statistic or a victim of the general economy, but rather you're looking at this to say, hey, it doesn't affect me in whatsoever. I think it was a total of 7 or 8 people, friends of mine, who called just out of the blue, who have lost their jobs. And on this particular webinar, I did not, and I assure you this, I did not allow or invite a single friend or a family member. I'm very strict when it comes to things like that. That if you're willing to learn, then I'm sorry, you're going to have to meet me halfway. You're going to have to put some effort into this. I'm not just going to put it on a plate. I could easily have charged my uncle a coffee or a sandwich. But the reason I charged him, it wasn't because I needed the money. I didn't need the money. It was because he will value it. Because if I did do it for free, I know him, it would just be something that was a conversation and there's no merit to it. So I'm hoping that the objective of today for you is to learn this as a primary or a secondary skill set. And hopefully this can help you, your family members, and hopefully it can help you out of the situation that we're in right now as a global economy. So how did this all get started? Well, actually, it wasn't just a few weeks ago. I actually did this in 2008. There was a guy, his name's Tom. He was the IT director of a company that I was a chief market strategist at over in the Monument in just near Tower Hill, London Bridge, sorry. And one day he came into my little office and he said to me, can we really make money? I mean, all you guys sitting here, you guys are trading. And outside my office, I had a private office there. He came in every week. I'd get people coming in. So he came in and says, outside your office, these guys are doing fixed income. And they are looking to make small percentages. And just over there, those guys at the FX desks, they're looking to make extraordinary returns in the period of a few days to a few weeks. So I said, look, Tom, why don't we just do it for real? Because it's the easiest way to do it. Why don't we just put £2,000 into an account and then let's just see what we get over the next 10 days? Now, there wasn't a challenge. It wasn't as if I was saying, let's make 15,000 or 20,000 or even 5,000. That wasn't the purpose. The purpose was just to see what can we achieve in the next 10 days. So that's 5 trading days each. Now, the current situation has led to difficulties for people. And it was just something I remembered when I did this for my uncle and then this friend of mine over in Singapore. Things really changed. And so I'm calling it an experiment. Actually, it was not an experiment. It was actually a favor. But I launched this idea, I think it's probably a better word, that what if I just show them what to do? Would it help them? And at the same time, when I was speaking to Success Resources, I had originally planned to go from Malaysia to Japan, Vietnam, Singapore, but came back to the UK. And I was going to do a live event, a get together in Singapore. I said, hey guys, I'm going to do a get together. It's $125 to help cover the cost of the venue. If anybody's interested, just let me know. And we were full up within the space of an hour. And so when I spoke to Nikki, I said, look, just as an idea, I don't mind doing a webinar just to keep in touch with people. I mean, I'm bored. I'm just that kind of person. I need to be active. I need to do things. And out of this whole conversation, here we are today, all of us from people right across the globe. So if we can help 2 people and we show them the exact same things to you, what kind of results can we get? And so this would be really interesting to see how this works out over the next 10 days. So what if we learn about trading and then create a plan? To be honest, this is the hardest part. It's to actually learn about trading. That is the most difficult part. If I can get that part out of the way, the actual techniques are ridiculously simple. I mean, in the space of about 10 to 15 minutes, I can actually show it to you. But showing it to you and then you using it and you're applying it in your own space, in your own lifetime, that's a completely different thing. So we do need to learn about trading because without the foundation, none of this works. That's the most critical and the most difficult part is the trading. And it's the human psychology coupled with the activity that makes this difficult. So we need a plan. Then we'll create a strategy based on the plan. Then you have to understand volatility. What does that mean? And then money and risk management. Then you're going to trade the strategy with a plan and a small capital. This isn't something where you need $20,000, $30,000. It's not. There are a lot of people right now who are saying that online is the way. This has proven it, and that people have to set up websites and then go and find customers or find a product or a service to sell. We're not in that category. We don't need to do that. We don't need websites. So if we can keep this really simple and get the foundation out of the way, I'm pretty sure that at the end of this, you're going to look back and think, oh my God, this is crazy. And it is. It really, really is. So here was the result for 13 days. It was supposed to be 10 days, but he did it over 13 days and it went from £2,000 to £12,548. Now, the second person, the lady in Singapore, she in 2 days earned $16,614. What's the difference between these 2 people? The lady was at it all day, whereas my uncle doing it all day, he was just dipping in and out because remember, he's still working. He had his job. So he was doing it almost part-time. And the difference between the 2, the other thing was that the first person only did it at £5 per point, whereas the second person, she started with $10 per point and the frequency had increased. But in terms of the technique, the same. So today, I'm going to teach you not just the one technique that I taught them, but I'm going to teach you 2. Okay. So let's get started. I have to, by law and by regulatory and compliance reasons, go through the disclaimer. So financial trading carries a high level of risk to your capital. Only speculate with money you can afford to lose. Financial markets can be very volatile, and prices may move rapidly against your interests, and resulting losses may require further payments to be made. Trading may not be suitable for all customers, therefore, ensure you fully understand the risks involved and seek independent advice if necessary. This workshop is for information and educational purposes only and is not intended as an offer, recommendation, or solicitation to buy or sell. No representation or warranties made that this information is complete or accurate. Now, I want to just highlight that point about information complete or accurate. It's not referring to the results, it's actually the data. So later, I'm going to talk about software, and I'm going to talk about why that's really important, because if your information in terms of your data is wrong, then the results can be dramatically different. Okay, so that's something that I want to discuss a little bit later on. Now, game plan. So we want to learn about trading, and that's going to be the longest part of this process. Then we need to create a plan. That's not going to take long. That's going to take us about 10 to 15 minutes. And then we'll create a strategy. You don't actually need to create it. I've already done it for you. Now, there's a program, there's actually 3 classes that I offer to the public. There are actually 18 classes, but it's not for the public. These are for the industry, for companies, and for media companies. But the 3 classes that I offer the public, the first one is called Fast Profits Trading Strategies, which is a 2-day program, which a large volume of people on this particular webinar are from. Now, that program, the purpose of it is designed to get you started. That means learn about trading, get started, and in 48 hours, go out there and then learn. Make the mistakes. That was the thing that I said to you in every class. Make mistakes. Please, please, please make mistakes so that you can learn from it. Then a high portion of people then go on to something called forecasting. Now, forecasting is a very, very, very powerful program. It's actually what made me my name in the industry. And on CNBC, for 16 years, every week, sometimes twice a week, I'm presenting very specific levels in the markets. And that's why I told you since 2 years ago that watch the Dow Jones at 29,500. That's where we're likely to see a potential reversal. Who knows, it could go higher, but that's a target that we're going to keep an eye out for. And the Dow's done that. It's gone up to 29,654. So forecasting, in my opinion, is the most powerful workshop. And there's quite a number of people that haven't done it. And there's quite a large number of people who have done it. And I've always said, do forecasting twice. So there's been some requests in, can we do forecasting in this way online, just so that you sit at home and do it? Yeah, we can. There's no reason why we can't do it. It's just that I personally enjoy being live in a classroom with you. It's so much more fun. There's so much more I can give to you by being in person, rather than just looking at a microphone and looking at a screen. It's just not the same. There's a difference between reading a book on your iPad, just swiping a screen, to actually picking up a book and turning the pages. There's a different experience. So yes, we can do forecasting online. It can easily be done within a day. Then after that, I offered a class called Daily Income. So again, there are 3 classes: getting started, then becoming semi-professional with the forecasting program. And Daily Income is designed for one sole purpose: to teach you how to become creative. It's not to teach you how to make daily income. That's for you. For me, it's to start teaching you how to see things in a different way, to look at the technical indicators, to apply them in a very different way. Sometimes we can take one technique and just change it slightly and get pretty good results or pretty disastrous results. So Daily Income was designed for people to say, hey, look, every day the market's offering you opportunities. Why don't you just dip in and out? And out of all the 3 classes, I get people saying that Daily Income is the one they enjoy the most. So the question is this class the same as the Daily Income? No, it's similar. As I said to you before, it's similar. The techniques are slightly different, but the objective is still the same. We want to go in, we want to get results on a daily basis when the markets are open. Sometimes we need to make slight changes. Sometimes we need to make drastic changes. Sometimes we use completely different techniques. But the goal is the same. try to get money, try to get a profitable trade out of the markets consistently with low risk on a daily basis. So the strategy you don't need to create. I've already done it for you. Now, the difference with this and the main daily income workshop is that here we're only looking at 2 techniques. In the full 1-day program, the daily income live workshop, there are 10 techniques in there, and they're all slightly different to each other. So here, I'm going to just give you the template to say, here's the technique. In the daily income workshop, we were using 2 or 3 different software packages. In this online version, we're just going to use one. So I'm trying to simplify this as much as possible for you, the ones who have done daily income, the ones who are experienced. But at the same time, for those of you who are new, I want to do this so that you don't need to go out there and buy lots of software. You don't need to go to all the different places. Right now, in the real world, especially where I am in London, you go to a shop and they're pretty much sold out. Then you have to go to another one, then another one, then another one. Wouldn't it be easier if everything was just in one place? And that's why I did this. I put all of this in one place so that you can just have one platform, use the techniques directly off the platform. And that was really the purpose. So I've created the templates for you. So we need to understand volatility, money, and risk management. I'm not going to go too much into money and risk management, not today. That's part of the program. But I am going to show you why that is absolutely necessary and actually the key to growing the account to even larger size. And I'm going to hold back on that because I want to teach you things piece by piece. Then I'm going to show you how to trade the strategy with a plan. So let me just talk a little bit about how this is going to work. In order for you to learn today, I want you to just watch, listen, observe, comprehend it, understand it, let it sink in. If I give you a workbook, what's going to happen is you're going to be switching between the workbook and the screen, the workbook and the screen. That's not what I'm intending to do here. You will get a workbook. I will give you a link later on which you can download the workbook. For now, I just want you to watch. What you're seeing on the screen is in your workbook. Not every single slide, but 90% of the slides here are actually in your workbook. So all I need you to do is pay attention. And if you pay attention, you'll absorb more. And then when you absorb more, the results can be better. There are actually some people who I've prevented from coming into this particular program. And there are some people who've actually managed to get in who I don't even want on this program. And the main reason is just their attitude. It really sucks. I mean, they're on some of the chat groups. They just cause distress, negativity, it's just their attitude. I kind of skipped over and I thought, you know what? It's your second and final chance. If you want to behave that way, then yes, you've picked up a good key skill set here. But you know what? If this is something you can use and it helps you, great. But you stay in your box and let us stay in our box. We want to make this work. We want to get out there. We want good results. So with that in mind, I'm going to teach you how to create your own plan, and hopefully you go along your own little merry way and let this work for you. So let me give you the outline. Today, we're getting started, and that's from the beginning. That means we're going to start all of this from the absolute beginning. Then you're going to practice what you learn. It's such a shame that tomorrow most of the markets are actually on holiday. Ideally, I would have preferred for the markets to have been open, and then you could have just started tomorrow. But that's okay because there's a couple of things that you need to do, and you can do that today and tomorrow. So today you're going to learn how to get started from the beginning, and then tomorrow, all the way up until Saturday or Friday, you're going to apply everything you've learned, and then we're going to come back. So next week on Sunday, we're going to do another session of this online, but we're going to do it within 2 hours. And we're going to look back and then evaluate what you've done during the time where you learned something, just like I taught the other 2 people. Here's what you need to do. Now go away. And can we check the results? But instead of 2 weeks, let's just do it next weekend. Then I'm going to cover also the mental side of this, because by Tuesday, Wednesday, you're going to discover how much this is a mental game and not so much just a money game or a mathematical, which it is, but you're going to understand that you're going to experience extreme levels of emotion because it's money. And then later, I haven't got the date confirmed just yet, but it'll be very soon after next Sunday, probably within the next, I would say the next couple of days after next Sunday. We're just going to go live into the market and then just see what happens when the market's moving. And I'll walk you through the process so that you can actually see it when it's moving. Okay, so there's actually 3 sessions here. It's supposed to be 1 session for today, but I'm actually giving you the additional programs because I just want you to make this work. So this is going to be the outline of the program. Now today, I'm going to teach you in the first session about trading, what it is, how it works, the language, and what you need to know. Then I'm going to give you a 45-minute break. Now, just please note, I don't have a box here which I can see all your questions because I want to be focused and I want to teach you what I need to focus on, and that's getting the information across to you. But you will have a 45 minutes break. Okay, now I have no idea which part of the world you're in. It might be that 45 minutes is too long for you because you need to go to sleep. But there are some people in the parts of the world where it's just the afternoon. I'm just being fair to everybody around the world. Okay, there was 1 or 2 people saying, can we change the time because it's not convenient for them? No, just going to be fair. And this is going to be applicable to every single person. Then when you come back from your 45 minutes break, I'm going to teach you the platform and the techniques itself as well. So first I need to teach you the foundation. Then I need to teach you the platform with the strategies. Then I'll give you another 15-minute break. So we're going to go on now for about an hour and 15 minutes. Then I'm going to give you another 15 minutes break later after you've learned the platform and strategies, bathroom break. Then I'm going to come back and revise everything you've learned today and then do a Q&A session. Okay, so that's what we're going to do today. It's technically speaking a 3-hour program. I'm not in a rush because I've got nowhere to go and I'm pretty sure you have nowhere to go. So I don't want to rush this. I want to make this enjoyable. I want to make this educational and I want this to work for you so that if your employer comes back and says, I'm sorry, but the company's gone down, you can say, that's okay. I have a backup plan. Now, nature is pleased with simplicity and nature is no dummy. Sir Isaac Newton. So I've always said to you, please keep it simple. Do not overcomplicate things. I don't like complicated people. I like really simple things. I enjoy the simple things in life as you do. There are times we enjoy the complicated things. So I don't want to complicate this strategy. Later, when I show it to you, you will see how simple it actually is. It's crazy simple. So let's go into what is trading. You don't need to take too many notes. If you want to take notes, can. I want to highlight something. Please, please, please do not video or screenshot this because it's called karma. It will come back. The market will just take it back from you. If you have shared your link, your private link with other people, Zoom will kick you out and Success Resources will not let you back in. So don't do that, okay? Just focus on the screen. So trading is exciting, it's fast-paced and intense. And you may have heard about it before, but what does it actually mean? In simple terms, it's about buying and selling. The point of buying and selling financial products is to make a profit. So it can be done anywhere in the world, as long as you've got a decent internet connection. And anyone can be a trader, including you, as long as you're over the age of 18. You are speculating on how you think the price of a product will move up or down. So if you think of this on basic terms, I'm in London. The weather is really nice today. It's sunny and it's kind of warm. What if we ask the question, what do we think the temperature is going to be tomorrow? Is it going to be 18 degrees, 19 degrees, 20? Some of you might say, yeah, I think it's probably going to be 19 or 20. And others might say, actually, no, I think tomorrow's going to cool down. It's probably going to be about 14 degrees. We're speculating. Now, we're not gambling or we're not guessing. We're not just making uneducated guesses. In trading, we want to try and put the odds or the statistics on our side. And there are definitely ways that we could do that. So essentially, what we're doing is we're backing our thought process on what we think is going to happen next. That's it in its most simplistic terms. So some people view it as gambling, and some people view this as very high risk, and some people view this as we're not working, not doing nothing, sitting on beaches and Ferraris and stuff like that. Not true. Now, is it true that you could go to a beach and do this like we can see in the picture? Yes, but also no. The internet connection is not that strong in many, many, many places. On the other hand, if you do have a strong internet connection, then yes. What I'm going to teach you today, can you do it from a phone? Definitely yes. Ideally, you want to have a bigger screen than a phone. So a simple rule, if you think the price of a market is going up, then you're going to buy. That means that you're entering a position where you believe it's going to go up. So in technical terms and the financial markets language, we can say that we're going long. Long simply means up. If you think the price is going down, then you sell. Think of it like this. Imagine that there are two buttons, and one button is blue and one button is red. Now, if you think the market's going to go up, press the blue button. If you think the market's going to go down, press the red button. If you look at it like that, then you don't want to overcomplicate it. Basically, you've got two choices. I either think it's going to go up or down. So the rule is the same across all the different markets and strategies. So it doesn't matter if you're trading the US markets, the South African markets, the European markets, the Australian markets, Asian markets. The application is the same right across the board. Now, in the last few days, especially probably in the last few weeks, there's a number of, and I'm sure you've been bombarded with it, there's a number of people who do internet programs, whether it's online marketing or whether you want to go and sell a product or a service, you want to set up a website. Internet marketing people face changes all the time. Facebook is changing its algorithm, as does YouTube, and they change their policies. And you might have a website selling an Amazon products and a customer complain and Amazon decides to shut you down. We're not interested in that. We don't touch that stuff. All we're doing is we are looking for one thing, and that's called movement. As long as the market moves, and it doesn't matter which way it moves, up or down, or even sideways, it creates opportunity. So if we think it's going to move up, then we'll buy. If we think it's going to move down, we'll sell. If we're thinking it's going sideways, we'll step aside. Okay, so just keep it that simple. So what markets can you trade? There's a huge choice out there. There are literally thousands of markets. So if you categorize them into groups, there's Forex, which is foreign exchange. That is the biggest market. Actually, that's what they tell you. There are two big markets. It's the bond market as well as the foreign exchange market. So foreign exchange, that's how much money is exchanged every day on the biggest financial markets in the world. Some people who had no experience have heard the word Forex or currency trading. Just be careful who you're learning from and how they advertise it. It is a big market and there is a lot of money, but there's a lot of cowboys out there who just want to teach you how to get rich, buy a Ferrari or Lamborghini and sit in an apartment in the middle of a lagoon. And that's how they portray it. It's not like that. Please, it really annoys me as well as the people that I work with in our industry, gives us a bad image. The foreign exchange market is big. There is a lot of money. Not everybody makes money out of it. Shares, the stock exchange, same concept. It's a big market. And it used to be shares where people were saying, well, if I can go and trade on shares, then I can just leave my job and just do this full time. And I haven't seen on a very large scale people being able to do that because they just don't focus. They come in, they come out, they dip in and out of this stuff here. So indices, this is something what I focus on. Now, I started when I was young. I was 15 years old. My father taught me originally how to trade. I wasn't even interested at all, honestly speaking. I had no idea what I was going to do at 15. But in those days, my father taught me the absolute basics, and we were trading on something called T7s, and it was mostly on shares. Stock indices around, but it wasn't as popular as the shares. It wasn't until I was 19 years old that I started to dip my toes more seriously into it. And it was really when I was 24 years old that I really made the decision that this is what I'm going to do, because I didn't do well at college. I studied engineering, didn't pass, couldn't get on further to another college. So I had to come back to trading. And that's all I've done. So if I look back then and I look at now and I compare what I had and what you have, it's unbelievable. It's like somebody sent me a message the other day and they said, can you imagine if we went back 20 years ago? You'd be sitting with a little Nokia in your hand with a 30-minute lifespan, and the battery life wouldn't be more than 30 to 45 minutes, but your internet connection would be so poor that you couldn't even watch a video on it. Now, for you, that means nothing because you've got these fancy phones, the Samsungs, the iPhones, and the Huaweis. But things have changed. So right now, for you, you can trade in all of these markets, literally, and the word that I use is it's global markets at your fingertips, because you can tap into these through your phone, your iPad, and your computer. So my specialty is mostly on indices, and later I'll show you the thing that I like to trade on. Commodities, I like oil. So if you go back and watch my CNBC clips for the last 16 years, almost on a weekly basis, I'd be talking about oil, I'll be talking about Dow Jones and the FTSE 100, the UK market. Now, I didn't trade the FTSE 100 so often, but I was just commentating on it because I was based in the UK until I was doing the US commentary and the Middle East for Dubai. So in one aspect, all of this doesn't really matter whether it's foreign exchange, shares, indices, commodities. What I'm looking for is just one thing, movement, and they all move. Some move more than others and some move less, but as long as they move, I'm interested. Then let's take a look at foreign exchange, euro dollar, one of the most widely traded currencies. The price of a market can go either up or down, and you're always speculating on how you think the price of a market will move. So let's take a look at the example. Here's a chart, and don't be scared by this. It looks more complicated than it actually is. So on the top, it says euro dollar buy trade. So on the yellow part, that's where the market was. It was trading from a low, it went down, up and then down a little bit and then up again. So it reaches a point of a fork in the road and it asks you a question, do you think it's going to go up or down? So you think at 1.06295 that the market's going to go up, which is the green line. So you buy. And if it does go up, then you're making a profit. But what if you thought, I think it's going to go up, but actually it doesn't and it starts to go down? Then you're making a loss. So now we've got to ask this question, and I'm sure you're asking it already. How do I know it's going to go up or down? You don't, and you don't need to. There are techniques out there, which I'm not teaching on this particular program, but there are techniques out there which you really do not need to know which way the markets are going to go, and you can still make a profit. And that's something which you cannot do in a lot of businesses. So for this one, what I'm doing here is at that point where the market is making a decision, I need the market to give me an indication of what I think it's telling me it wants to do, and I want to back that decision. If I get it wrong, I'm going to get out. Look, here's the problem. It's easy to open up an account. You can open an account in less than 5 minutes. Trade on, it's not working, and they hold it. They stick with it. And then it's going the wrong way, and they're still sticking with it. If you ask somebody, you're driving in a car, and that's the direction over there that you want to go to. But instead of going in that direction, you're going in the wrong direction. Are you going to keep going in the wrong direction, or are you going to stop and turn the car around? 99.9%, the average normal human being would stop and turn the car around. But 99%, the average normal human being in trading will not get out of the trade because they're going to hope that it's going to just turn around and that the market was wrong and that they are right. That's called ego. And that's something that everybody has and nobody wants to let go of. And that is the hardest part. So we have to create a technique or a strategy and a method and a plan to help avoid that. And I'll show you how we can do that. Let's say that you think the price of euro will fall against the dollar. So you sell. The price of the euro falls, so you've made a profit. So in other words, let's say today the temperature is 15 degrees and you think, you know what, tomorrow I think the temperature is going to be 10 degrees. And you decide to enter at $10 per point, and the temperature goes from 15 degrees to 10 degrees. How many points is it from 15 degrees to 10? 5 points. And if you decided to trade at $10 a point, you've just made 5 points times $10, which is $50. So let me repeat that again. Today, the temperature is 15 degrees. You think the temperature is going to go down from 15 to 10 degrees. If you get it right and the temperature does go down from 15 degrees to 10 degrees, the difference between 15 and 10 is 5 points. And if you decide to trade at $10 per point, that means that 5 points times $10, you've just made $50. If you did $20 a point, you just made $100. If you did $5 a point, you made $25. If you did $1 a point, you made $5. Now, if you thought that the temperature was going to go from 15 degrees to 10 degrees, but actually the temperature went from 15 to 18 degrees, you're wrong. The temperature went up. So you entered at 15, the temperature's gone to 18 degrees. There's a 3-point difference there. If you did $10 a point, then you just lost you've just lost $30. So looking at a specific market, we're trying to decide if it's going to go up or down. And then we're going to back our judgment with a specific amount. Okay, so if we think it's going to go up or down, we want to back it by a dollar amount or a currency amount. It could be dollars, euros, or pounds. So now we've got to go into managing risk. So before you start trading, there are certain things you need to know, and that's risk. And everybody has a different level of risk. For example, stay at home, stay safe, help the NHS. The government's saying stay home, be safe, don't go out. It's across the TV screens every 10 to 15 minutes. Maybe in the country that you're seeing messages, they're telling you to stay home, not to go out. But are people going out? Are they taking a risk? Everybody sees risks in different ways. So you have to assess what kind of risk that you're willing to take. And it comes down to knowing your personality. You've also got to consider your goals and standards, ideally before placing a trade. So I wouldn't do this. I wouldn't go out and borrow money from the bank or from somebody just to trade. I just would not do that. I can't advise you. I'm not going to advise you, but that's not what you want to do. The most important thing about risk is that you need to be able to be aware of it, and you need to know the tools that you could use to balance the risk and opportunities effectively. Luckily for you, trading platforms provide you some really tools. And for example, here's 2 examples here. Guaranteed stop loss order, a stop or limit order. Now, this depends in which country you're in. It depends on which brokerage company you use and what tools they offer. So a guaranteed stop loss order allows you to set the exact price and guarantees that price at which you wish to exit a trade. Now, I saw something unusual for the very first time in that, well, actually, it's unusual, but it's not unusual. We saw the markets go into what we call lockdown, and I'll explain that later. But there was a lot of companies which had to remove the guaranteed stop loss order. Now, when that happens, you've got to ask yourself the question, Are they seeing something that we're not seeing? So a guaranteed stop loss simply means that that company is guaranteeing you to exit at a specific level. Now, that's different to a normal stop loss because there's no guarantees. So I'll just give you a real life example. It was September the 11th, and I was actually in Amsterdam. I was speaking at a major financial conference. And I left Amsterdam, Schiphol Airport, on my way back to London to Heathrow Airport. When I arrived, there was something unusual going on. Now, I had taken positions on in the market several days before. I was long, that means I was expecting the market to go up. And when I arrived in London and we found out that the plane had crashed into the Twin Towers, the markets closed down for 5 days. And meaning that I couldn't get out. Nobody could get out. You couldn't trade. When the markets opened, they opened quite a way down. So I couldn't get out at the level that I wanted to. The market got me out at the first point that it opened at. So there were many people who had used guaranteed stop losses and they were able to get out safely. So during extreme times, guaranteed stop losses are really useful tools. In some countries, for example, the US, Belgium, or other places, they don't offer these guaranteed stop loss orders, but every country, most countries, will offer you the basic stop loss order. That means that they'll get you out at a level that you would like to get out of, but they cannot guarantee that. Now, a limit order is an area that you'd like to get out to take a profit. Limit orders can be used in two ways. It's an area to get out, but it can also be used to enter the market. But the way that I teach you, we're using it to exit a trade. Okay. Now, all of this might sound very complicated. It might, oh my God, I don't understand what the heck this is. It's okay. It's fine. It's because it's the first time for many of you. But once you start doing it, it becomes so simple. Okay. It will come to you with practice. So let me just very briefly talk about order types. There are orders to open a trade, and I'll actually demonstrate this later. So I just want to get through all the foundational stuff, and then later I'm going to demonstrate everything that you've learned today. So using an order to open a new trade is a very useful risk management tool. Your technical analysis of the market will identify levels where you might want to enter a new buy or sell trade. Rather than having to continually watch the markets, waiting for the price to reach your entry level, you can leave resting orders above and below the market and let the market come to you. So let me give you an example. Let's say the temperature is 15 degrees today, and you decide, I think the temperature is going to go up, but tomorrow the temperature went down. You're wrong. It took me years to just make a small change, and it completely changed the way in terms of my P&L for my trade. I started placing resting orders or orders to open. You could do this. Today, the temperature is 15 degrees. I think the temperature is going to go up. But instead of just getting in and trading, taking a buy position, I could do this. I could just say, well, today is 15. If the temperature is going to go up, it has to go to 16, right? Has to, because if it doesn't, then it's not gone up. I can place an order at the level 16 to say, if you get there, then get me in. That's called an opening order. If the temperature doesn't get to 16, then nothing's happened to your trade. Your money's still in your account. It's still safe. So again, if the temperature is at 15 degrees and you think it's going to go up, instead of just taking a trade, you can just instruct the market by giving an opening order and say, hey, if you get to 16, then get me in. And if it doesn't, then it didn't get you in. So you're still on the safe side. But is it possible that it can get to 15 and yep, it can. So these are things that I go into much greater detail in the 2-day program, but I just want to introduce that to you here because this is not a 2-day program. This is going to be a 3 to 4 hour program, but you do need to know about this and it's in your workbook. Guaranteed stop losses, as I said before, it's a great tool if you want to absolutely guarantee the price that you'll exit your trade. And in times of higher volatility, which we're in now, using the guaranteed stop loss can give you total clarity on the loss should the market move against you. Okay. So again, it's the brokerage companies that you're trading with. Check their small print on the guaranteed stop losses and what they're doing in terms of these volatile environments. Guaranteed stop losses are not as flexible as a normal stop because you won't be able to leave your order as close to the current market. And as with any insurance contract, you'll have to pay the broker a premium or an extra spread charge if your order is triggered. So what this means is that, let's say a market's trading at 1,500. That's just the level that it's trading at. I could say, I want the market to go up from 1,500 to much higher. But let me enter here at 1,500. And if it gets to 1,450, I want to get out. Yeah, I can put a stop loss there. I can put a stop loss at 1,480, very close to where I got in. But the guaranteed stop losses, the companies will decide a minimum distance that it has to be away. So usually it's like 1% of the price. So they might say that you entered at 1,500, but your guaranteed stop loss has to be 150 points away. It cannot be just 50 points away. And that's the downside of guaranteed stop losses, is that they are a minimum distance away. So just be aware of that. Okay. The stop loss, the basic, simple stop loss, is a lifesaver, which most people don't use. So whenever you consider a new trade, you should think of the three things: the price you want to enter the market, the price to exit if the trade goes well and is profitable, and the price to exit if things do not go to plan. So a stop loss is the level you want to exit the trade if the market moves against you. Unlike a guaranteed stop loss, the price you set is not always going to be the price you'll receive, and that's known as slippage. So I'll come back to that later when I actually show you the charts. A normal stop loss can be left very close to the current market price, and so whilst there will always be a risk of slippage, and there's more flexibility than you will find with a guaranteed stop loss. Limit orders, or sometimes referred to as a take profit order. So let's go back to the temperature example. Let me just read this first to you. It says, you have decided on your entry level and left the resting order above or below the market. And you have also established a stop loss level where you want to exit if things go wrong. So now it is time to set your exit level when the trade reaches your target price and you want to realize the profit you've made. So entering a limit or take profit order is a good discipline and as important as your entry and stop loss orders. Let's just put it into a practical example. Temperature's 15 degrees. Let's say we think the temperature is going to go up. So I could do this. I'm going to place an opening order at 16. So I'm saying this: today the temperature is at 15 degrees. I think it's going to go up. I want to place an opening order at 16. That means that if the temperature goes up to 16, it will bring us in. At the same time, I want to set a stop loss order, and I'm going to say, hey, temperature, if you go down to 12 degrees, you better get me out. I don't want to be with you if you're going down. I want to be with you if you're going up. So we're going to enter at 16. And if it goes down to 12, let's get out. But I can also say this: hey, temperature, I don't want to sit here all day and just watch what you're doing. Tell you what, if you go to 20 degrees, just get me out. And that's a limit order. Okay, so what we've done is three things. We've placed an order to get in. We've placed an order to get out if we're wrong. That's using the stop loss order. And we've placed an order to get out if we're right, and that's your limit order. Now, I could do this the other way. I could say, hey, temperature, you're 15 degrees right now. I think you might go down. So I tell you what, to prove to me that you're going to go down, if you go from 15 degrees down to, say, 13 degrees, can you please get me in? Because I think you might continue to fall in your temperature. But if you actually go back up to 15, then you better get me out. So I have my stop loss at 15. So I'm going to enter at 13 to go down, put my stop loss at 15. And then I'll say, hey, market, if you get down to 10 degrees, just get me out. I just want to take a profit. So these are all called automated orders. That means we can automate the whole thing. We don't have to sit and watch screens. I don't teach those techniques here, not in this program for this online version. I can teach that to you in the one-day programs because we have a lot more time, a lot more techniques. The goal of this particular program is to show you how to get in, out very, very quickly, manually. But I want you to learn this. I just want to give this to you as part of this program because as you develop your career, as you develop your experience with this, you'll find a lot of this is going to be very, very valuable for you. Now, this is something we have to cover, market gaps and order slippage. So what are these things here? A market can gap. So this normally happens overnight and it happens a lot on the weekends. It didn't happen so much when I was very, very first trading 35 years ago, but you see a lot more of it now. See, what's happening is this. When the market's closed, there are things happening which we can't see. Donald Trump might open his mouth, something might happen in another part of the world, and all of these things can impact the market. So it's very important to understand that markets do not always move in a uniform manner. During times of uncertainty and volatility, it is quite common for gaps to appear between prices. For a trade to exist, there must be a buyer and a seller who are willing to trade at the same price. If there are only buyers wishing to trade the market, it will have to move to the next price where sellers can be found. Now, this is what is known as a market gap. If you have an order that happens to be sitting in the gap, then you'll be subject to something that is known as slippage. So your order couldn't be executed at your chosen level, and so it has been slipped to the next price where the market can attract both buyers and sellers. So let's go back to the temperature example. Let's say we think the temperature is going to go up. The temperature right now is 15 degrees. And I want to get in to go up if the temperature goes to 16 degrees. So this is what could happen. The temperature might just jump from 15 to 17. So our order does not get filled at 16. It now gets filled at 17. It gets filled at a worse position than we expected. See, originally we thought the temperature will go from 15 to 18. And if we got in at 16 and it gets to 18, then we made 2 points. But if it gapped up to 17, then we've only got a 1 point left to make the profit. Okay, so gaps happen, and especially when you get very volatile situations like now, we're seeing gaps happen in so many markets, which is why the daily income techniques are so good, because we are not going to hold any positions overnight unless you want to. We are going to get in and out very, very, very quickly so that we can avoid the gaps and we can avoid the slippage. When we placed the order at 16 and it got us in at 17, that's what we call the slippage. And it's not your broker. Sometimes I read these chat groups and it just drives me nuts. Some of these people think that your brokerage company is always out to get you. Look, there are companies like that exist out there. But if you're trading with a regulated company, it is highly, highly unlikely that they are going to be using scrupulous mechanisms to go against you. It's not going to happen, hardly. So you want to get yourself with a broker that is regulated. Now, even if a broker is regulated, slippages and gaps can still happen, okay, especially in these volatile environments. So I've said so many times that the year from 2019 up until 2023, I think these are fantastic years. But 2023, sort of mid 23, 24, 25, they're okay. 26, end of 26 starts to get exciting. 27, 28, 29, again, another series of very, very good years. because I expect the volatility to increase there. Potential war between China and the US, a number of different things that could happen. But when the markets become extremely volatile, that's when you're going to have to deal with these market gaps and order slippage. So let's talk a little bit about leverage. What is that? Leverage is an important factor when trading the financial markets. It is a very useful tool that means you only have to deposit a small percentage of the total value of the trade. But it's important to understand what effect leverage can have on your trading. Yes, you might only need to deposit a relatively small amount to place a trade, but markets can move quickly and losses can be amplified by the leverage you use. So leverage of up to 200 to 1 or 0.5% is more than enough for any trader. And later in the presentation, I'll demonstrate what effect leverage can have on your account and capital that you need in your account. There are 500 to 1, 1,000 to 1. Leverage is nice when it's kept within reasonable, controllable amounts. And 200 to 1, 100 to 1, which would mean 0.10%, is pretty good. So, for example, placing a trade on the Wall Street 30 market, also known as the Dow Jones 30, is one of the most popular for retail traders all around the world. The Wall Street 30 market closed on Friday at a price of around 23,800, as an example. If you wanted to place a trade on this market without leverage, you may be asked to deposit the full value of the trade. So a £5 a point trade would require £5 times 23,800 is £119,000. That's how much money you would need to trade. But a broker offering leverage of 200 to 1 or 0.5% would require a fraction of this amount to be deposited. So £5 times 23,800 times 0.5%, you only need £595 to take the trade. Think about this. When you buy a house and the house is $100,000 and the bank says you need to put down 10%, what's that number? $10,000. Another bank might say you need to put 20% down. So same house, $100,000, but you need to put 20% deposit down. So you need to put down $20,000. Now, there are times when the house prices can also be quite volatile, but not as volatile as the markets, where the prices can fluctuate. The banks may change and says you need to put larger deposits down or smaller deposits down. The financial markets are, in some respects, similar. They can change those percentages, and that's something you should keep an eye on. Your job is to find a bank that gives you a decent way of being able to buy your house with the lowest deposit requirement and the lowest costs, the lowest fees. The same with trading companies. You want to find companies which give you very low cost trading facilities. So in terms of margin, it's basically another word for deposit. And margin is the difference between the funds held in your account and the money loaned to you by the brokerage company. So when you trade, you'll be trading on margin, or what is referred to as margin trading. It means you only need to deposit a small percentage of the total value of the trade in your account. The rest of the amount is borrowed. As you only need a small amount in your account, margin trading gives traders access to more markets what would normally be out of reach for retail traders. Now, to keep a trade open, you must have a minimum amount of available funds in your account. This is known as a margin requirement, and it's a different amount for each market. And I'll show you this later. Okay, so there's a place which you can look at, which tells you how much money do I need to trade this market? How much margin do I need? So how do you prevent yourself being closed out of a trade for being undercapitalized? Nobody likes losing money in a trade. After all, it means we've got things wrong, but losing trades are a fact of life. And here are some top tips. Don't take unnecessary risks. Plan your trades in advance and put stop losses in place so that you stay within your means. Monitor your account status and be aware of how the markets are moving. You must ensure you always have enough money in your account to support your open trades. If you can't place a trade that stays within your trading rules, walk away and wait for a better opportunity. Do you remember when we had the situation where property prices were dropping and the banks were just loaning out money left, right, and center. What the banks didn't do was this. When a person came up and said, we'd like to borrow money at a job, how long they were in that job, give you a loan, no problem. And that led to very disastrous results. Look, in trading, please don't do this. Please don't think that I'm going to start with £100, £200, and I'm going to trade every day, work my way up to £1,000, £2,000, and then 10,000 and 50,000. And I'm going to get rich. I'm going to make a lot of money with very, very small amounts of money. Is it possible? Yes. I can show you people who have been trading with very small amounts of money and have taken it to extraordinary sizes. But the key thing is this: it's possible, but please do not take excessive risk. We're at COVID-19 situation. Is it possible that you could go out and pick up a virus? Yeah, it's possible. How much risk you want to take, it's up to you. You could keep going out all day, every day, or you could minimize going out and just go out at the right times. In trading, you want to go in at the right times. You don't want to be going in, out all the time. You want to make sure that your account is capitalized, that you've got money in there, enough so that it can weather the market going against you. And later I'll demonstrate that. But you have to have enough money in there and trade at such a small size that it doesn't affect you. We always say that whenever you put a trade on, is it a trade that you can go to sleep with without having to wake up every 5 minutes and worrying about the trade? There's an old saying that it's better to wish you were in a market than wish that you were out. Okay. So it means that sometimes you'll miss the move, but it's better to be out of the move wishing you were in rather than wishing that you were out of the move and couldn't get out. It comes down to risk management. I want to talk a lot more about this subject in the second session next week, even though it's important now. Every time I've been teaching for, I think, 24, 26 years, don't know how long. It's been a long time. I'm in my industry. I used to teach. We used to run classes for our companies, and I've taught for Reuters. I've taught for Dow Jones. I've taught for CNBC. I ran a program for 2 years every single week on CNBC teaching trading. When it comes to teaching, people just want to know one thing: how do I make money? They are never interested in how do I manage risk? How do I protect my downside? How do I become a better trader? How do I manage my emotions? They are never the questions that are asked. It's always, how do I make money? How do I make it quickly? Show me how to make the money like right now. I'm just interested in making money very, very quickly. If you don't manage risk, you won't survive. And if you don't survive, you won't make the money. So survival is the number one most important aspect that we've got to think about. Having the mental stability is equally as important. And that comes a lot down to managing risk and being and feeling comfortable. Okay, so I will give you, and I'm not going to leave that out, but I will cover this in more detail when the time comes. So initial margin is the margin requirement that is the minimum amount of money you must hold onto your account to open the trade. So if you remember the trade for the Dow Jones, it says that we needed £595. If you had 550, it wouldn't let you put the trade at £5 per point. So you need to have the £595. So it's generally a percentage of the value of the trade. And this means multiplying your trade size, which is usually in dollars, pounds, or euros per point, by the price of the market you are trading, by the margin rate that applies to this market. And margin rates for each market can be found on the brokerage trading platform. All brokerage companies should tell you what the margin requirement is. So let's go to look at the Dow Jones. Now, it says the quote to trade the Wall Street 30 market is 23800 to 23801. Now, you may recognize that. It's almost similar to like when you go to the airport and you want to change your currencies. There are two prices there. So you decide to buy £5 per point, which you can do at 23,801. This means that if the Wall Street 30 market goes up to 23,802, then you'll be making $5 profit because it's gone up 1 point. But if the Wall Street 30 market moves to 23,800, you'll be losing $5. Now, in order to take that trade, you need money, and that's called margin. So the initial margin requirement for the Wall Street 30 is 0.5%. So the initial margin requirement for this trade is £5 times the number 23801. Multiply that by 0.5%, you need $595. So when I showed you on the webinar last week, I think it was, in the week before, I think I did, yeah, it was 2 webinars I did for Success Resources. And a lot of you, when you look at the results, you're thinking, I could see some of the questions like, oh, you must need $20,000, $30,000, $50,000 to do those trades. No, you can see it's telling you that the initial margin requirement was 500. Both of them traded with 2,000 in their accounts. That's more than covering £595. And because their stop loss was very, very close by, they didn't need to have a huge amount of capital to enter the trade. So again, we'll talk about this later when I show you how to do it. Here are just further examples. I'm not going to go through all of them, but it's going to be in your workbook. What I suggest you do is that you manually go through it, okay? You look through it. And here's one for gold. Different markets will have different margin requirements. So for example, if you buy a property in one area, it might need a higher deposit than a property in another area, okay? So some markets require higher margin and some markets require lower margin. So what you want to do is to find the markets that you want to trade and find a company that you want to trade with, but make sure that they have competitive margin requirements. That means that they have low margin. You don't want to pay over the price for something. So you want to find a company that will help you to have low margin. Now, here's another example, oil. Okay, so these are in your workbook. All of these slides that you're seeing here, they're actually in your workbook, which is why I told you I don't need you to write this down. You have it. It's in your workbook. It's all there for you. Later, I'll give you a link which you can just download the workbook from. Okay, so right now, just pay attention, watch and listen. And here's one for euro dollar. So this one, it tells you that you only need £107 and 52 pence to take a trade on euro dollar. Okay, so as your exercise for not this week, but the week after next, this week, my goal is for you to just get your account open, place your first trade, and then start practicing the technique that you're going to be looking at. I'm expecting this week to be volatile. So there's a good opportunity that the market should be able to make some decent moves. So here, the initial margin requirement for this one is £107 and 52 pence. That's quite a low amount. Okay, if you think, just think about how many people can enter the world of trading and look at the capital requirements. They're low. They're not like some other businesses where you need to have a large capital requirement. These are very, very low margin requirements. Okay. Now, this one is just an example. If you want to trade Apple computers, again, it's in your workbook. And this one is on Barclays Bank. They are all the exact same principle. They are just different markets with different numbers. The principle is the same. What's the price of the market? How much am I trading? What's the percentage margin requirement? Do the simple calculation and it will tell you how much you need. Nowadays, the brokerage company on their platform will tell you how much you need to put on your trade when you insert the numbers in there. Okay. Now, variation margin, because markets are constantly moving as buyers and sellers are driving prices higher and sellers are pushing them lower, markets can move against you and they will move against you. You're not going to get every single trade right. So when this happens, if all you have in your account is the initial margin for a trade, then your broker will ask you to deposit additional funds, which is known as variation margin. So what I suggest you do is to make sure that you have enough money in your account rather than the brokerage company having to call you, which is called a margin call, or without them having to send you an email to say, hey, you need to deposit more funds before your account gets stopped out. So it says here, this is why it's important to hold extra funds on your account and to use stop losses to close positions if prices move too much against you. Okay. So again, these are just further examples. This is crude oil. So you bought £2 per point of crude oil at 3,153. the initial margin requirement for this trade was £2 times 3153. You might choose to do £5 or £10 or £20 or dollars. So here it says 1% is the amount required for this. So that's $63.06. So let's say crude oil drops to 3103, that's 50 points. That means you'd have a running loss. In other words, you haven't realized the loss just by closing the trade of 100. So you enter at 3153, it drops to 3103. Okay, that's $2. So you'd still need to have that extra money in your account, and that's what your variation margin is. You have to read this 2 or 3 or 4 times to really get your head around this if you're a first-time trader. But like with anything else, you will get it. It's just, you just need to practice 1 or 2 trades, go through the experience. And that's why I'll always tell you to start with very, very small amounts. Do not trade with large trade sizes. Just start with small amounts. And then again, there's an example here for the US 500 index, which is the US S&P 500. Okay, so these are in your workbook. Later you can go through these. Now, circuit breakers, what are these? So it says in times of exceptionally high volatility in global financial markets, not only does it make it difficult to trade, but these large and volatile moves trigger what is called a circuit breaker. And this is when a market falls or rises by a set percentage, triggering a halt or a stop to trading. Circuit breakers give the market participants time to reassess the situation. And it's designed, I would say, to help dampen the volatility and bring some calm after sharp moves. They are usually temporary, although trading can be halted for a whole session or days if the market moves significantly or if a circuit breaker is hit towards the end of a session. So recently, what's happened is, because of the COVID-19 situation, there's been a lot of panic, and human beings panicking a lot, their emotions will be displayed in the financial markets. So because the situation was bad and people expected negativity in the economy, the markets were falling sharply. And what happened was a lot of people were trying to get into a trade, but they couldn't because they had frozen the market. It's called limit down. So that means that you couldn't sell, you couldn't go short on the market. And when this happens, it's an indication that the markets have reached a specific level. It's not the brokerage company that's stopping you from trading. It has nothing to do with them. It is the exchange. It is the exchange where that market is trading on. They are the ones that are stopping the liquidity providers giving the price. Look, let's say today you want to buy a loaf of bread and you go to your local shop. And right now they're saying, we don't have any bread. Why not? Because our wholesaler has not supplied us with the bread, so we cannot supply you with the bread. So the wholesaler to them is like what we call the liquidity provider. Now, either go to a company which has a liquidity provider which can give you a price. Now, they're normally called market makers. That's a little bit, I'd say that you've got to be a little bit cautious with that, because they could create a price which would be completely out of whack, and you don't want that. So when the exchange is saying that, look, we're locking the market limit down, it just means they're trying to stop the market from free falling. Sometimes it can go into limit up. That means they're trying to stop the market jumping up too much too quickly all in one go. They're trying to soften the moves. I personally don't like it because I want that market to freely move. But it happens and I've got no control over that. So I just have to find a market which is not having any limits on. So let's say, for example, you decide to trade last week or the week before, and your brokerage company said, hey, you can't trade on that because it's locked limit down. But I want to trade. You cannot because it's locked limit down. Instead of complaining, go and find a market which is not locked into a limit move. There are thousands of markets you could trade with. Why are you chasing one market? And that is an average retail trader, inexperienced, highly emotionally charged individual. Just go and find a market which has not been locked up. Okay, but you've got to be aware of these circuit breakers. So again, it's in your workbook. It's giving you the examples. A limit down circuit breaker is the maximum downward move for a market within a given traded session. A limit up circuit breaker is the maximum upward moves for a market within a given trading session. So this is for the New York Stock Exchange. The NYSE says that the level 1 circuit breaker is if the market falls or rises by 7% from its previous day's closing price, then they're going to stop trading for 15 minutes. Okay. If it's gone by 13%, then they could stop trading for 15 minutes. And if the market's rising or falling by 20% from its previous day's closing, they can stop trading for the whole day. Now, how does it affect your trading? If a market is halted by a circuit breaker, then you will not be able to place any trades in that market until it begins to trade again. If you have an order in the market which is triggered, when the market reopens, it will be filled at the next available price, and it may be subject to slippage, which we covered earlier on. If the temperature is at 15, you place an order at 16 to get in, but it actually jumps to 17, then that's where you're going to get filled. So you will be unable to amend existing orders on the market whilst the market is halted under these conditions. Not all markets have circuit breakers, but all US stock indices do. Okay, so that's the Dow Jones, the S&P 500. Market types. Now, this is interesting because there are two different types of contracts you could trade. I mean, actually, there are a number of different contracts. There are CFDs, futures, options, ETFs. But here, we're looking at something called rolling cash versus futures. So when selecting the market from the list in the trading platform, you may have or see a choice of a rolling cash, rolling spot market, or a futures market. For this particular program, the one that I'm teaching you today, we're not interested in futures. We are only going to trade the rolling spot because we're going to be able to trade contracts that we want to be in and out within minutes, seconds, minutes, maximum a few hours. So the rolling spot or the cash contracts are usually chosen by traders who have a short-term view about where the market is heading. The spreads, the costs to trade on the rolling products are lower than the futures products. And I'll talk about spreads later when I show it to you. But there are additional charges if you trade these markets and hold a trade overnight. And these are known as overnight financing charges. And we'll cover this in a short while. So futures markets, whilst having wider spreads, are the market of choice for those traders who are looking to take a longer term view on the direction of the market. So rolling cash is for short-term trading. Futures contracts are for longer-term trading. So there's something called overnight funding charges when you're trading these rolling contracts. So you need to be aware that holding your trade over or rolling it to the next business day will incur overnight funding charges. The roll is done automatically by the broker if your trade remains open at the close. So let's say, for example, I live in the UK. Dow Jones opens here at 2:30 and it closes at 9 o'clock. And I do a rolling contract because I think, I'm only going to hold it for a few hours. But at 9 o'clock, I haven't closed my trade. That means that contract will automatically roll over into the next day. And there are charges liable onto that. So the charge is calculated by using a formula that takes into account the value of your trade, the cost to borrow the money in the country where the market is traded, and then an additional administration charge from your broker. If you're rolling your trade over a weekend, you'll be charged 3 times the normal daily fee. So overnight charges, whilst relatively small in size, can become a significant cost of trade. And so it's important to understand when these charges will apply to your account and how they can affect your profitability. It doesn't affect us, not you and me, not right now, because the techniques I'm showing you, we are not going to be holding trades overnight. But I want you to have this. It's in your workbook because at some stage later, you may be holding trades overnight. At least we've covered that here. So market dividends, why do they affect me? You'll often hear when a company declares a dividend or a payout for its shareholders. And when the dividend is paid, the share is known as having gone ex-dividend. So the price of the share is then altered by the amount of the dividend that has been paid. If the company paying the dividend is part of an index, for example, Boeing is part of the Wall Street 30, a trade that is open on Wall Street index will also be affected by that dividend. And then the value of the index will be adjusted accordingly. If you have a trade open when a constituent of the index you are trading pays a dividend, you will see an adjustment on your account, a debit if you have sold the market, and a credit, that means you've got money coming in if you've bought the market. And these dividends can be paid at any time, and a weekly list of what is expected can be found on the broker's website. So a lot of the stuff that we've just covered sounds, wow, it's a mouthful, it's a lot, it's giving me a headache. It's okay. I'm just doing this because I know that at some point when you start trading, there are going to be questions like, why was my account charged? Why is the margin required? Why are they calling me? Why are they messaging me saying that I need money? All of this will become relevant later. I know right now all you want to do is push a button to say, get me in here, get me out, and put the money in my account so I can go on holiday. I can hear you thinking that, but you need to know this. Everybody wants to fall in love. Everybody wants to have a happy relationship, but not every relationship is a rosy relationship. There are times when things don't work out. What are you going to do when things don't work out? It's better to prevent than cure, as you know. So it's better that you understand all of this rather now than later. Okay, so later when you get the workbook tonight, just spend some time with this. Futures trades, now they expire. So the question is when? The difference between a trade on a rolling market and a futures market is that rolling will not close unless you place a trade to close your position. There are no overnight funding charges to pay when trading futures, but a futures trade will close automatically on a specific date and a price known as the settlement price. And the date of that market expiry is listed on the broker's trading platform, which I'll show you later, and can be found when you click the market information button. So it's important to know when your trade will expire, as you will have two options on this date. You can leave it to close at the price, the settlement price, or you can ask your broker to roll the trade over in your next futures contract. So let's say today that you decided to go long for the market to go up on gold. And when you click on the platform, it says a rolling contract or futures. And you decide that you want to stay in this trade for 6 months. So you press the futures button, the futures contract, but the futures contract expires on a specific day, which is the third Friday of the month of that expiry. So for example, we are now in April. Let's say that the gold contract expires in June. And on the third Friday of that June, you're happily having dinner somewhere at a restaurant with your friends or family, celebrating that COVID-19 is all over and just reminiscing on how bad this was. And in your mind, you're thinking, oh, gold prices are going to go up and I'm expecting it to go much higher than where they are. But about a week later, you check and you don't see a trade on your account. Why? Because it expired. So you've always got to be aware of the futures contract expiring on the specific dates. And again, I'll show you this a bit later on. There's something called partial closing. So you can part close your trade. There'll be times when you only want to close part of your open position. So for example, you may have a £5 or $5 a point trade on the Germany 30 market, which is called the DAX 30, and decide that you would like to reduce your exposure to this market. So you want to get out half of the position. So you can do this by placing a trade in the opposite direction to the initial trade in any amount up to $5. So a part closing trade of $3 with dollars a point position. Part closing a trade can be done by trading at the current market price, or you can leave one or multiple orders from the market and wait for the market, okay, which is what we talked about, placing the orders. So trading hours, every market will have set times where the broker is able to accept trades from you. These opening and closing times will vary, and as with other specific market information, it's important to know when you'll be able to trade. This information can be found in the Market Information tab on the trading platform. So there'll be occasions when a market may appear to still be trading, but the broker is not able to accept trades from you. This is because there are certain times of day where an auction will take place on the exchange where the market is priced yet and no trading is possible. But again, you'll have this on the information tabs in the platforms. So I just want to go over through very quickly your brokerage platform, and I'm going to give you a break. So choosing a broker, the 5 essentials: make sure that they're regulated. So confirm your money is kept segregated from theirs and in a tier 1 bank. Are the spreads and charges fair, and do they stay fair when the markets are volatile? That's really important. Is the trading platform easy to use, and does it meet your personal requirements? And can you speak to somebody at the brokerage company if things go wrong or you need help? So this is really important because it's like choosing a bank account. You can choose a number of different bank accounts, but you want to find a bank that will suit your needs, that they're going to offer you what you want. There's nothing wrong with having 2, 3, 4, 5, 6, 7 bank accounts. There's nothing wrong with having 2, 3, 4, 5 brokerage accounts. in the beginning, I've always said this, that I'm going to show you one platform. It's just easier if everybody's on one platform. It's easier if everybody's looking at the same thing. It's just easier to teach. But eventually, you might want to consider 3 or 4 different platforms. I'm not going to go into reasons why, not here, not now, but at a later stage, if I see you on a different program, I'll go into more sophisticated, advanced ways of trading and why it's worth having 2 or 3 different brokerage accounts. So let's say, for example, you have a cash point card and you go to your bank on the high street, you try to take money out, and that bank, for whatever reason, is closed. You couldn't get your money out. You're stuck. If you had a different bank and a different card for that different bank, then you can go to that bank and take money out. So it's the same with trading companies. Sometimes you might find that a particular company is not offering trades. I mean, it's highly unlikely that one company will let you trade on one market and the other one will not, because they're all controlled by the exchanges. But it's just, I'm just highlighting that at times it's worth having 2 or 3 different accounts. Okay. So there's a company I'm going to recommend to you. It's called Core Spreads, and they have the lowest fixed spreads and charges of any brokerage in the world. Now, I've noticed recently, actually, when I did the experiment with my uncle, this was when I really noticed it a lot, is when the markets were quite volatile, there were many, many companies where they would have a much, much, much wider spread. And Core Spreads kept their charges fixed. So it's like saying, I'm going to go and buy bread, and they're selling it for $1, $1 every day. It's just been selling for $1, $1. But suddenly there's a shortage of bread because of this COVID-19 situation, and they're charging $5 for bread. Well, actually, bread is the wrong example. It's toilet paper was the one that everybody was going for. And people raised their prices on toilet papers, tissue papers. But there are companies which stuck by their policy and did not raise the price. And Core Spreads, which is why I like them, they did that. So when the markets become volatile, as they are right now, they, unlike most of the other brokerage companies, won't increase their charges. Now, consistently low charges result in better trading decisions, and the more chance of success rises. Their trading platform and charting package is simple to use, which I'll demonstrate. They focus on speed and quality of execution and are less worried about the whistles and the bells found on other platforms. Now, speed is important. So again, this comes down to this. How fast is the transmission speed between a brokerage company to get to your platform? How fast is your internet connection? Are you in a poor service area? Is your laptop slow or your phone service slow? These are all things that can come into effect. In our world, we're looking for extreme speeds. It doesn't affect you so much, but even a millisecond can impact very large volumes of trades. But it just is something that you want to be aware of. And especially during these times where everybody's at home and internet connections and everyone's on Zoom, it can impact the service. Okay. So what I like about Core Spreads is that they've got quality regulatory licenses around the world, and they bank with Barclays in the UK and Westpac in Australia. So their platform, just going to very quickly show you the platform, what it looks like. I'm not going to go through all of this, but I'll just show you the key things. It's this one here, this slide. It looks complicated at the moment. Don't worry too much. I'm actually just going to go and demonstrate it live. So I'm going to skip this slide, and I'm going to go and show you how this works. When we have a break, when we come back, I'll show you how to do that. So it says how to place a trade. Step 1, click on the trade button. Then this ticket will come up. So here's a ticket which you really do need to learn. It's really simple. There are 2 colors, red and blue. If you think the market's going to go down, hit the red button. If you think the market's going to go up, hit the blue button. The box where it's got 1, that's where you decide and enter how much you want to trade. So for example, here, it's trading on Tesla Motors at $1 or £1, and it's telling you, do you want to go short or long? And Tesla at £1 is asking you for £4,115 margin. Not interested. It's too expensive, too much. Not interested in trading something where I need a lot of money. So I'll skip this one. I'm looking for markets which require low margin. Okay, and Dow Jones is one of those markets. I like that. So here's where it says to confirm your trade, press the submit button. Okay, and that's it. And then your trade will go through. But if you click the order, then you're doing something slightly different. Now it's asking you, same thing, do you want to trade £1 or $1 per point? It's asking you, do you want to go long or short? So to the buy, the blue button. But now it's asking you, where do you want to get in? Now, it's not going to be useful for us, this order button, because I'm not going to teach you how to place orders for the techniques I'm going to teach you, not for this particular program. But in my other classes, I focus mostly placing orders rather than the trade ticket. But again, it's here just in case you need it. And now it's saying, if you want to add additional functions, like if you want to put a stop loss, if you want to place a limit. But again, it's easier for me to show you, and I'll show you this a little bit later on after your break. Then I'll show you how all of this works. Okay. And here it's just saying that once you submit, if you have attached a stop loss and your take profit order, then all that information, just make sure that it's correct before you hit the submit button. Okay, so there's a couple of different things you could do. This is not going to be useful for those of you that are from the US or from Belgium. I think they're the two main jurisdictions which they don't accept. But if you're looking for a brokerage company, you can just go to Google and type brokerage company in your country. But they will accept, like most countries, they're accepting. I like this one here, corespreads.com.au. They give you the 200-to-1 leverage. The spreads are really tight. So it's very, very, very cost effective. It's very cheap. That's why, personally, if I was looking at this, then I'd be looking at corespreads.com.au, which is the one I think I'm not going to advise you. And by the way, I don't get a single penny for recommending this company. You can go and check. I've consulted for them in the past for a very short period of time for a number of companies I've consulted for. But under jurisdiction regulations, I cannot earn a single cent if you open up an account or if you trade with this company or any of the companies. I'm just not allowed to. It's against the law, so I can't do it. Okay, I'm just recommending them is because I like the company and their platform is just simple to use, and they're just easy to navigate. There's another one they've got, corespreads.co.za for South Africa. So if you can't get onto the Australia one, then you can try applying to the South Africa one. Okay, so those two. And they've also got one in the UK. But look at the leverage. It's 30-to-1 leverage. So this it's great. It's still the same company, but the leverage is a lot less because in the UK, the leverage has been dropped about a year and a half ago. So I'm suggesting that you might just the Australia or the South Africa one. The platforms are exactly the same. It's just the leverage is different. Okay. So what you need to do is just go and open up your live account. So click on your live account, and then it's going to ask you for your personal details. And then you just click on next. Put your financial details. You just ask you if you're employed or not, what your annual income and all that kind of stuff. So again, this will take you about 5 to 10 minutes to do this. And then it asks you to confirm that you've read the agreements, the T's and C's. Once you've done that and you click on finish, that's it. Okay, so that's opening up your account. Now, I'm going to give you a break. During your break, can you please, if you want to be part of the chat group, if you want to be part of next week's program, you must complete the survey. It's here. I think it doesn't confirm that you've completed the survey, but if you think you haven't, you're not sure, just go and do it again. But it's really important because I can't help you unless you tell me what it is in terms of the level that you've reached. Okay, don't try to skip this. Everybody that completes the survey will then go on the email list, and that email list is where I'm going to, or Success Resources will send you the email to join the private chat group where you will have access to me for the whole year. So you must complete this survey. Okay, this has to be done. So please ensure that you do that. Now, your workbook is here. Do not share this link. Do not share this. This is for you. Okay, Karma. You want to share this link and you want to go and give it to other people, that will come after you and it will take the money off you. So don't do that. Here's the link, https://bit.ly/FPSTWORKBOOK. So when you're taking your break, as you're about to go into, please complete the survey. It will take you 5 minutes, and then please download your workbook. Okay, you don't need to do it now. You could do this later, but I think for the next session that I'm going to go into, it'll be useful for you to have the workbook. Okay, you don't need to print it out for now. At least you've got it. So you're going to have a 45 break. Please, please, please come back on time. Please make sure you're back 10 minutes before. Do not log out of your system. Please stay logged in. Do not log out, because if you log out, you may not be able to get back in. So please make sure that you just stay logged in. The time now here in London is 2:45 p.m. If you can be back at 3:30 p.m., ideally 3:20 p.m. if you can be back, because I will start exactly at 45 minutes time. Okay, so you need to make sure you download your workbook and make sure you've completed your survey. You need to do both of these things. Okay, so I'm going to hand this over to Success Resources. I think they should be there. I think Nikki's going to be there. And I will see you in 45 minutes. Have a break, have something to eat or something to drink. Thank you.
You too.
once said, the will to win, the desire to succeed,
What takes guts is to put yourself on the line.
the urge to reach your full potential.
A leader makes the way.
These are the keys that will unlock the door to personal excellence. Success Resources is the world's leading events promoter of business, personal development, and wealth creation programs. For over 30 years, we've helped over 10 million people across 30 countries unlock their full potential. From North America to Europe to Africa to Asia to Oceania, we are the key to your personal success. We open the door to the world's best speakers such as Anthony Robbins, Sir Richard Branson, Robert Kiyosaki, and T. Harv Eker, to name a few. We have over 500 events a year and access to the greatest thinkers, achievers, and motivators of our time. We guide you to the success that lies in every one of us.
But you will not discover your greatness in your comfort zone.
We have never really truly reached our destination. There's always another level to strive for. Your best is yet to come. Success Resources, your learning partners.
Hey, welcome back. Welcome back. I hope that you guys have a good break. So Sandy has a lot more to share. So guys, please remember the house rule. All right. Do not share the link with your WhatsApp group or Telegram group. Just put in the chat box. Our panelist is helping you with all the questions that you have. So now back to you, Sandy.
Right, let's continue where we had left off. And just before the break, we covered quite a deep session. It sounds like there's a lot of information we covered, and we have. And for those of you that are actually first timers when it comes to trading, or this is the first time you've looked at this kind of information, it might feel like it's just way too much over your head. And that's fine. Anything that you do for the first time is always going to be overwhelming. But like with anything, once you start and once things become quite simple. Now, I just want to go through a few house rules again. There are quite a large number of participants on this program who are in my private chat groups. Please do not share the links, which is the survey link or the workbook link in those groups, because you will instantly be removed and you will be thrown off the webinar session as well. Please do not do that. Please respectfully understand that if people have questions, they know where they can go to in Success Resources. There is a list of numbers and email addresses that they can contact. Now, some of you are saying that you want to be able to share these links with other family members and so forth. That's just not going to happen. If you go to the cinema, you buy a cinema ticket, it is per person. You can't just put 5 people on one seat. Unfortunately, it doesn't work like that. It's called economics. So again, this is for you. You've paid for this, and it's for one person. Please respect that. Look, I don't want to go into too much house rules here. Let's move on. Now, I want to talk about creating a plan. So we want to find and create a plan for a strategy that's actually going to work for you. And the most important thing to understand when it comes to trading is, like anything else, one size does not fit all. You can find trading strategies which people like. Then there are going to be some strategies which you may not like, but somebody else likes. This program has not been developed or is catering to satisfy every single trading need. The purpose of this program, right at the very beginning, I said, was that if we take the question in the current environment, which is COVID-19, where people are facing situations where they're losing jobs, they're facing situations where their business might go down, they're facing a situation where they're locked at home. What can one person do in such an environment? Is there a plan B? Is there something else that you could do to earn an income or revenue from another stream? And that's exactly what this is about. What I like about Success Resources is that they don't, as a company, just push one idea. or one service. It's about giving you the choice. If you've ever met Richard Tan, he's a lovely person, Richard and Veronica. And over the last 4 years, they've become good friends. And we sometimes sit together and we share ideas. And Richard has always been, what can we do as a company to go out and share? That's the key word, to share with people knowledge and information. And when I first met Richard and Veronica, this was about 4 years ago, my message has been to create your own economy. And if you look at the world right now, it's so imperative that we understand where we are. And what if we had a few years ago taken a program which Success Resources offered? What if a few years ago that you had learned something that would have become very useful right now? When I went to China in 2015 to speak to the government, and then they had the riots there at that particular time. And when I spoke to a few people, I said, look, you're really wasting your time doing this because it's not helping you individually and it's not helping the economy. We cannot fight systems, governments, politicians, health systems individually. It's hard. But collectively, we can make a noise and hopefully somebody listens. One thing that has come out of this COVID-19 situation is that you notice that people are now starting to pay attention in both good and bad ways when it comes to society. I've just noticed that people are generally a little bit more nicer. They smile more or they let people through, which they didn't before. Everybody was in a hurry. There's lessons to be learned in such an environment. The lesson that I've learned, personal lesson, is, again, it goes back to that quote from Paulo Coelho that when you possess great treasures within you and you try to tell others of them, seldom are you believed. Now I'm getting people saying, wow, you actually said this on the Success Resources stage back in 2017. Yeah. You said that the market should peak at a specific number. You said that there is a specific frequency that's happening and that we're in a war cycle. Yes. And you said that 2019, 2020, 2021 could be very difficult years. Yeah. What I also said was this, and I actually said this to Richard and Veronica and the Success Resource team. During 2020, 2021, and going into 2022, education companies, Success Resources isn't an education company. They are a facilitator. They provide a service where they bring education to you. They themselves don't provide the education. It's like if you go to a movie theater, they don't provide the movie. They facilitate the movie. The movie is created by Hollywood. The cinema is just facilitating the movie. You cannot blame the cinema if the movie is bad. It goes down to the producer, the executive director of that movie. So I said to Richard and Veronica that during the period from 2020 to 2022, this is a time when you need to be out there more because this is where people need you more. Education during these times is going to become absolutely critical for facilitators who provide the education, for individuals like you and me, that we need to learn what to do in such a current environment. So the plan that I'm going to show you now is a plan that fits the environment right now. And plans can change. You know, you have to navigate through the good times and the bad times. So let me show you some really simple concepts. And this is the part of the program where we really start to get interesting to see how this all starts fitting in together. So take comfort, hold on to your seats. We're about to go into the techniques. So our requirements is obviously trading capital. We need money. Now, we don't need much. I've put on here £1,000 to £2,000 minimum. That's based on the strategies that I'm about to show you. If I'm being honest, you can actually you could start with £500, but it will not let you trade the size that I'm about to show you. But I'm being open and realistic that if you can start with the £2,000 mark, then you're actually in a very good position, and you'll see why as we go through. But this is just an average. There are people who can start with a lot more, and some of you a little bit less. You will need a laptop with a good internet connection. During the break, I was just looking at some of the comments, some sarcastic, some funny, some genuinely asking questions. The internet connection is important. And some of you said that you only see a black screen or that you only see a specific box. I can tell you that I've got multiple screens here. I'm looking at what you're looking at, and we have had no outage during today. Sometimes we do get outage. An outage means that we get a drop in the internet connection. That is expected. And that is why I've always admired Success Resources, Richard's original vision to go out there live in person and bring people together. There is nothing like being in a live audience, nothing. There's a different experience there. And I really can't wait until Success Resources get back out there to do the big live events. But in the interim, what they have done is they've adapted to the current situation. They've adapted to people being at home and using and utilizing technology, but to still keep in line with what they aimed in the beginning to do, which is to provide the educational service, but right now through the online platform. It's not that they're new to online, it's just that it's their secondary mode. Their primary mode has been to be doing things live in person. Yeah, I mean, Success Resources have always got some programs which are interesting to watch and learn from. But right now, whether we're watching this program on Zoom or whether you want to start trading or doing something else, your internet connection is going to have to be up to a decent speed. Just recently, I asked for a second and third backup for internet, but a lot of the companies are not working right now. They said it's going to take about 2 months to get another internet line installed. Sometimes it's good to have a backup, like I have an Android phone, a Samsung, and I have an iPhone. So with what I'm about to show you, it would be good to have an internet connection, but at the same time, you also want a backup, a secondary connection, and that's where your mobile phone comes in, because that will work off a SIM card. So I have 2 different phones. They're both on different SIM cards on 2 different networks, as well as 2 separate internet connections. Okay, so these are things to keep in mind. Then you'll need a trading platform with charts. So the one I recommended, Core Spreads, I said, I don't work for them. I just like the fact that they're simple, they're regulated, they do things by the book. They have a simple, clean platform, and they have the tight spreads. They have low margin requirements. Every company is looking to compete for tight spreads. That's the business that they're in. So they have a simple charting platform, which I'll go through with you as well. Then we need a simple plan, and then we have to manage the process. Okay, so there's basic things that we have to think about. Now, let's start here. You want to create a trading account and then deposit funds. Don't go crazy and say, let me go and put £50,000 or $50,000 in there because I'm going to be able to make lots of money with more money. It doesn't work like that. If you can't make money with a small account, you're not going to make money with a big account. You want to start with a small amount and then work your way up. In part 2 next week, and also part through a process on showing you how with a beyond your imagination, you can increase your return. It just comes down to position sizing and money management. But for today, we won't have the time to go into that, but it is part of this program, which I'm going to show you how to do that. Then we want to create a simple plan, learn the platform, and ideally get your first trade on as quickly as possible. The next part is to evaluate the trade and start a journal. Now, one of the things I'd like you to do, it's something that I've always told people, is to go and buy a writing pad and a pen. In life, when I give gifts, you will know how I value you by the gift. I'm not into all the fancy stuff, the fast cars and stuff, but if I give a pen or a writing pad, it means I value you. Thousands of years ago, in the times when we had the kings, the rulers, their advisors, this was a time when they didn't have paper, so paper was called papyrus and a pen was called a script. These were vital tools and they were only given to elected members. And yet today we take it for granted. But a writing pad and a pen is essential because you want to start writing the journal about what trade you took, why you took the trade, what was the reason you entered, what was the reason you exited the trade, how did you feel when you were in the process of that trade. So as basic as this sounds, it's going to become essential for you to do this. So what is your plan? Can you handle risk? You want to make money, that's fine, but can you handle risk? You want to start a business, great, but can you handle that the business may not work? You want to go and climb Mount Everest, but can you handle the risk that you may become ill? You may not make it to the top of Mount Everest. If you've ever watched one of the episodes of Richard's mountain climbing experience when he did go up Mount Everest, even though his intent was to climb Mount Everest, he had to face and overcome hurdles during that process in trading, in business, in relationships. There are going to be hurdles. Not everybody is born with a gift. They do it well. We all have our weaknesses and strengths. And one of the weaknesses for humans is they don't know how to handle risk. And that is an essential part of any business. Controlling emotions, I've always said to you, and for those of you that are new, that one of the key parts of becoming successful in this business, not the key part, but one of the key parts, is learning how to control your emotions. It's learning to let go, learning to detach. I have no hesitancy in learning to let go. I make friends. I will have new business partners. But the moment that I feel that I'm being used, the moment that I feel that I'm not being appreciated, the moment that I feel that I've been taken advantage of, I cut. I cut even faster than I make the friendship. And I've kept by that throughout my life, which has helped me. It's a good skill to have. And if I hadn't have done trading, I would not have been able to learn that skill so fast. You have to take a look at your life right now and ask yourself this question. How many people in my life right now are useful for me as a person? You don't want to use people. You're asking the question, are they useful for me in my life? Like, are they helping me and am I helping them? If you find that somebody is just using you, taking up space in your life, cut. Just cut. Do not hesitate. When it comes to trading, especially with what I'm about to show you, if it's not working, you need to cut super fast. The more you hesitate, the more you wait, the higher the chance, the bigger the risk that you're going to go into a negative position. Get out. Right now, a lot of companies are having to evaluate how they're going to do business, which staff they're going to keep, which contractors they're going to work with, what is the new business plan moving ahead. Everybody is facing some sort of change. If you're unable to be emotionless, you'll fail. In life, sometimes we get second or third chances. In trading, we don't. It's swift decisions, and that is an absolutely essential skill to develop. And it's not going to come out of thin air. It's something you have to develop. It's something that will take time, but that's okay because we're going to invest time in ourselves. Do you have the right starting capital? As I said before, this business, we don't have an office, we don't have staff, we don't create products, we're not providing services. We are simply capitalizing on the movement of the financial markets. And in good times and bad times, the markets move. We don't have recessions. Right now, whilst everybody is worried that we're going into a recession to a depressionary state, I'm not worried. This has been one of the best times for us as an industry and for the markets. So you want to make sure that you want to always be capitalized. Now, I don't have the time here, but if you can come along to one of the Success Resources talks where I have more time or we're doing our get-togethers, I can then explain to you how to adequately allocate your capital. Now, soon, when the whole situation has changed and we can go back to live events, there is some very critical key information that I want to show you and share with you, but I will only do it live. I would not do it online. just for the risks of the distribution of how quickly this thing can be distributed online. There is research that you would not have seen. August the 17th, I sent out that message to say, watch from November 2019 to January. And I then said, watch China. And you've been hearing me say that it could stem from a financial situation, from the banks or financial situation. It could be a virus. And I also said, watch out because we're in a war cycle. So these things have transpired. And the reason is because of the time period that we're in right now. And this time period has just started. Whilst everyone is talking about when is this going to end, no, it started. This is a new dimension that we're in right now. And if you were prepared and you had the capital allocation, you'd be in a very, very, very good, strong position. So when it comes to trading, you want to make sure that you have capital allocation so that when the opportunities come up, you actually have the money there to trade with. The good thing about this is you don't need to have a large capital base. You can actually start, as I said, with £1,000-2,000, and it's enough to get started with. You'll be surprised with the results. This is absolutely important, critical. Are you prepared to make mistakes? Answer has to be yes. In this business, losing is part of the process. Think of a shop, for example, 7-Eleven. When you walk into the shop and you see all the products on the shelves, do you think that every single product sells? No. Some of the products don't sell. They sit there for weeks and months and never sell. Other products go off the shelf very, very quickly. So was it a mistake that they bought something that nobody's buying? No. In trading, there will be times when you take a trade and it looks like it's not working. Cut. Was it a mistake? No, it was part of the process. If you're going to learn how to run, you better learn how to fall. If you're going to learn how to play tennis, you better learn that sometimes you won't hit the ball. If you want to take up martial arts, you better learn that one day you'll get a black eye. Everything has a consequence. And in trading, what we want to do is to minimize the consequences that we will face when it comes to taking on risk. Now, are you willing to put in the effort? Yes, you have to. I don't believe in passive income. It's just not the thing that I believe in. I believe that there is always some element of being active. So everything requires effort. Without effort, there's no motion. Without any motion, there's no result. There has to be motion. If there's no effort, there's no result. So we have to work on effort, but then the next stage is to minimize the effort. Over the last few hundred years, when we've gone from the industrial age to the technology age, information age, everything required effort, but we're trying to find ways of minimizing that effort. So in trading, in the beginning, there is effort. When you learn to drive a car, there is effort. You have to learn to drive the car. You have to learn what the gear stick does, the handbrake, the foot pedals, the different mirrors. It feels like a lot of effort. But contrast that to when you have learned to drive a car. Now you just get in the car, you put the music on, and you're talking to somebody on the phone through your hands-free. You're not even looking where you're going. You instinctively know where you're going, and you're even aware of your surroundings. But in the beginning, it required effort. In the beginning, trading may feel like it's a lot of effort, but you'll get to the point, you'll get to the stage where you'll see the trade happening before it's even happened. And that is called experience. So these are things that you have to overcome, and it will take some time. So our objective, we want to trade the Dow Jones Index, and that's called Wall Street 30 on the platform, which is CoreSpread's platform. Different platforms will have different names, which is why I'm saying to you at the beginning, we'll just start with the one platform. We're going to trade intraday with no overnight positions. So we're looking at trading the rolling contract, not the futures contract. We're not worried about overnight charges because we will be opening and closing the position very, very quickly. Our aim is to capture a profit as quickly as possible. Now, when I say quickly, how quick is quickly? It could be a few seconds, it could be a few minutes, it could be potentially an hour. But it depends on how fast the market is moving. So again, I'll have to show you that part when I get to the charts. Exit a trade if it's showing signs of not working. If the trade looks like it's not moving, get out. So when I show you some of these results that I was showing earlier on, you'll notice that some of the trades makes 20, 30, $40. Some made a few hundred, and some was even 1,000 or plus. I'll demonstrate to you what those trades look like when we look at the chart itself. But you need to learn to recognize through experience that there will be sometimes it looks like the market's not moving and you just entered the trade. If you've entered the trade and it's not moving, get out. Don't give it a second chance. Get out. Look, right now I'm having to make a lot of business decisions. I have business partners and we've been having regular talks because on my consultancy side, I've been the busiest in the last few years. And I've got a lot of companies saying, we need your help right now. Please, we need to develop technologies. We want to develop some programs. So I'm now going to go through a process to say, right, where is my effort getting me a result? If I'm putting a lot of effort here and not getting a result, cut. If I'm putting less effort here and getting a bigger result, then I'm going to put my attention over there. We have to do that in business. We have to do that in life. Okay. If you had a friend and it was you that kept calling your friend, it was you that kept taking your friend out, it's you that always paying the bills. At some point, you're going to get tired. You cut. You allow a new person to come into your life and say, hey, don't waste my effort, don't waste my energy, because I will reward you equally of what you're giving to me. These are life skills. And in life, a lot of what we do in trading, the skills actually come from life. There's a class which I do, as long as you're part of the 2-day workshop, not this one, but the 2-day workshop, I do a focus group for 2 days. And that focus group has been designed for the last 25 years of this. This year is the 25th year. For 25 years, I've been bringing people together at a very specific location where it's full of high natural energy. And the whole purpose of those 2 days is teaching people how to let go. When something is not working, cut, just let it go. Okay. So this is going to become such an essential skill for you. So we're going to be trading and using something called MTF. So what is MTF? MTF in our industry stands for multiple timeframes. Okay. So for example, let's say you want to go somewhere and it's quite far and you're going to take the highway. But before you get to the highway, there are small roads. And before you get to the small roads, there might be some very small lanes. They're all roads in one way or another, but they're in different sizes and you can do different speeds. In trading, we have different time frames. So we have the monthly charts, we have the weekly charts, we have daily charts, and then we have 4-hour charts, hourly charts. For this particular program, we're not interested in the monthly, the weekly, or even the daily charts as far as we go. We're only interested in very short-term timeframes. Why? Because we're going to get in and out very quickly. So multiple timeframes, which I'll demonstrate to you, is simply utilizing 2 different timeframes. Okay, and that's going. So let's look at this for volatility. So we need volatility for fast profits without drift directionless. So whilst you're hearing in the media, wow, have you seen the market just moved, the biggest move in the history? It's just done 1,400 points in one day. And I've been in the media for 16 years and I see how they operate, and they base on an operation of fear. Don't let that scare you. We are looking at this as that, wow, this is fantastic. The markets are moving so much. This is absolutely brilliant. But what we don't like is when the markets are not doing anything. So for the next 3 years, these are going to be absolutely brilliant times for us as individuals and for companies who are involved on the trading side. What if the markets crash? Great, it's fantastic. I met Robert Kiyosaki. Originally, I was in Russia and Robert was there, and then I came back, and then we were in Dubai. Success Resources were in Dubai. They launched this huge, amazing program in Dubai for the very, very first time. And Veronica said to me, look, can you come out to meet us? Because we're going to go out for lunch and Robert's there. And I think you'll both get on to talk about the markets and the economy. So when we were being driven around Dubai, we spent the whole day together. And in the evening, I sat there and Robert was going through a brief with the company in Dubai about how the program was going to work the next day. And then it was already way past midnight, and I was sitting there with my laptop, and Robert Kiyosaki came over and says, wow, what is this? And I said, oh, this actually tells us when the markets are going to crash. And he said, I've never seen anything like this. And ever since I met Robert, and he's been an advocate, he's been a supporter. He's a great guy. If you read his books, Rich Dad, Poor Dad, and he's written a number of other books. But the key thing that Robert focuses on is education. He's always had this desire to get people out there to wake up to the real world education. And some like Robert and some don't like Robert. It's not about whether you like the person. It's what the person offers. How useful is that to you? Nobody's asking you to become best friends with Robert or any of the other people out there in the world. It's, can this person offer or teach me something of value? And can I then respect that person? So when I told Robert that, look, when the market reaches this level here, there's a high expectation that we could see a decline. And it's interesting how it's all panned out right now. But there are going to be times when the markets are just going to drift directionless. And that's where you have to employ different trading tactics. So what I'm teaching you today is absolutely brilliant for times where the volatility is high. But when the markets start to drift without any volatility, then we lose the edge. Then we have to employ some different tactics. Okay, so just keep that in mind, that you actually ideally want to be able to have different strategies so that you could use them for different times. Look, you can have an umbrella. You go outside and there's some light rain and you can use an umbrella. But when it's really thundering and it's showering really heavily, your small umbrella is not going to help you, even though it's an umbrella. You're going to need a bigger umbrella. So sometimes you need to have different umbrellas. Sometimes you need to have different strategies. So let's take a look at the strategies that are working right now in this volatile environment. Take a look at this chart, and what you'll see is that there's a chart split into two. On the top side, it's actually the market, and it says DJ30. So that's the Dow Jones 30. That is the US market. And underneath, there's this kind of pink purple line, and it says average true range 5. So I always use the setting 5 on an average true range for daily charts, weekly, monthly. I always use 5. So what it's showing you, it looks like there was this mountain peak. Just if you look at March, right in the middle of March, March the 16th, we had a peak and now it's coming down. Can you see that? At the peak, on the right-hand side, you can see 2.3K. And what that's telling you is during that time, this market was moving 2,300 points on average per day. Now, go back to before March. If you look at January, February, it was moving on average 250 points per day. And right now, it's moving at just under 1,000 points, around 900 points per day. So let's go back and revisit what I taught you earlier. In our world, in the trading world, each point is worth $10, or it could be worth 10 euros, 10 pounds. But let's keep to dollars for now. So if the market's moving 900 points per day, and each point is worth $10, this market is giving you $9,000 per day just on this market. It's offering it to you. So you can say, wow, that's great. I'd love to make the 9,000 per day. With the techniques that we're looking at, we're not going in to collect the whole 9,000. We're going in to collect a small portion. There are other techniques which you can employ where you can capture some really large movements in the markets. If you're interested in those, talk to Success Resources, ask them, let them know that you're interested, and ask them, when is the next program? Do you want to do it online? Do you want to do it live? But the key point is this: whilst the market's offering you 900 points per day, take it, capitalize on it, utilize it, benefit from it. Whilst people are worried about losing jobs, we're not, because the market is offering us a nice, decent size movement. So the process, I'm going to show you how to set up the chart and the parameters, and then we're going to use the settings provided for current markets. Then we'll find an entry bar according to your plan. We're going to manage the trade and the emotions according to your plan. Please do not overcomplicate this. When I asked Success Resources to put the link up during the break time for you to download the workbook, I personally did not want to do that. I wanted to give you the workbook right at the end. I can feel your anticipation when the class starts. Is there a workbook? Where do I get the workbook from? Why is he teaching us so much stuff about what the market is, about what the orders are, and about margin? I already know this. I've already done this. Yes, you know it, you've done it, but you're still making mistakes. Sometimes it's good to take a step back. It's sometimes good to revisit. But by giving you the workbook, what's happening is your focus is just on the workbook. The more things that you have in front of you, the more distractions that you have, the less likely you're going to focus. When it comes to the technique I'm going to show you, there is no room, absolutely zero room for you to focus on something else. Your entire attention, your entire energy is going to be on the market. 1 minute is going to feel like 1 hour. 1 hour is going to feel like 1 day. You cannot have any distractions. You cannot have any complications. It has to be simple and it has to be focused. So for every action, there is an equal and opposite reaction. So Isaac Newton. So strategy 1, we're looking at equal and opposite reactions. We're looking for a movement based on a previous movement. So we're going to open a Dow Jones chart, which is the market we're focusing on for this particular program. Then we're going to add from the indicators menu something called a Keltner channel. Now you do not need to know, and I'm not going to go into the technicalities of what it is and what it does. If you walk into a room and you want light, switch the button and you'll get the light. If you want to understand how the light works and electricity, go on the next program. Right now, you want light. Right now, you want revenue. Let's focus on the revenue. We're going to change the settings to a period of 13 and shift 1.3. So we're going to add from the indicators menu something called the Keltner channel. And then we'll change the settings, the period from 13 and then the shift 2. Okay, so you're actually going to add 2 Keltner channels. Look, number 2, add the Keltner channel, period 13, and shift equals 1.3. Then you're going to add another Keltner channel, period 13, and then we're going to change the shift to 2. So the rules are, we'll check the higher time frame for a trend. So this is where the MTF comes in, the multiple time frames. On the current chart, which is the chart that we'll be looking at, has the market reached KC? KC, no, we're not missing the F. It's not KFC. KC is the Keltner channel. Then we will wait for a reversal bar. We will enter on a break of the high for long trades and the low for short trades. Then we will place a stop loss accordingly. So earlier on, I said that we can do 2 things. We can place a trade or we can place an order. When it comes to intraday trading, we do not place orders. We're actually going to place trades, which means we're going to enter and then place the stop loss. So here, example, this is without indicators. And you'll notice that there are some arrows coming down. There are some arrows going up. So what this is showing us is the actual place where the trades came in. I didn't show too much of this in the earlier webinars because it would have confused you. And originally, when I did the first webinar, I can honestly say this, there was absolutely no intention, there was no desire to actually offer a program at all. It was just simply a webinar for the clients of Success Resources to say, hey, look, this is what's happening. And just by the off chance, there's a lot of people saying that they're losing their jobs. And one of them was my uncle. And that was the test that we did, the experiment. And it was just when people started to message Success Resources saying, is he going to offer a program? Is he going to allow us to do this? It was only then, by the second webinar, that we'd made the decision. So it wouldn't have made sense to you to have a look at this in the beginning. You wouldn't have understood this. So now take a look at this. Can you see that I've added these wavy lines? Now, there are different software packages, like in my 1-day daily income, there's a different software package. And it offers something similar to this, but it just behaves in a different way. In the 1-day daily income workshop, you're looking at 10 different techniques. And each of those techniques are pretty simple. They don't take long to learn, but there are 10 of those. In this class, there's only 2. And this is a variation of one of the techniques. It's a different indicator. The principle can be the same. Look, 2 people want to run. They both want to run. One is going to be a marathon runner and one's going to be a sprinter. They both want to run. They both want to win the race, but they have 2 different ways of doing it. In technical analysis, there are many indicators, many indicators. Some of them appear to do the same thing, but they just do it in a slightly different way. So just like the 2 runners, one would need to sprint and one would need to conserve energy. So with Keltner channels, they actually move a little bit slower. So what you'll notice is that we have 2 lines. There are the 2 lines which are together, and then there is a middle line. So a total of 5 lines. What do they mean? Okay. If I look at this arrow here at the top left-hand side, can you see that there's a red bar and it's touched the inner line? So what we'll call these lines on the outside is the outer lines. And then just underneath it, we'll call those the inner lines. And the middle line is just the center line. In my first workshop, the daily income, what would happen is I would give you another software which actually has very similar indicators to this. It just works better on a phone. The problem with that is that you'd need to have one phone with the charting package, and then you need to have another phone where you'd place your trade. Whereas here, you can do everything in one place. So what happens is when we see that red bar, it's telling us that the market could go down. So we're going to enter, and our minimum target is that middle line. And you can see that it's actually reached that center line. Can you see that? I want you to just take a look at that just very carefully. So take a look at that top arrow. Take a look at the top arrow. And then ask yourself, did it reach the second inner line? Yes? Great. Did it come down to the middle line? And did it eventually come down to lower lines? Great. So from here, we want to target this as a conservative and this line as an aggressive. Over here, what's happened is the market came outside the lines. It's actually touched the second line. Then it goes back in. So the red bars tell us the market came down, and the green bars tells us the market went up. So here the market went up. This one, the market came down. Okay. So what we're trying to do is to capture a very, very small piece of this movement. So we don't want to capture all of it. Now, look down here, the second arrow. It goes back in, and we want to reach that center line. Then look at this one. Can you see this green one here? There's another one here, but it's actually just not inside. This has gone back inside, and then it touches the center line. So this is just one where I showed you it's reached the middle line. Okay. There's another green one here. It came outside the line, closes back in, and then it reaches the middle line. So now look at the time. This is from 6 o'clock UK time till 8 o'clock. It's given 1, 2, 3, I would say 4 opportunities. Now, each of these movements are anything from 20, 30, 40, 50 to several $100s per movement. and look at how many opportunities you've had just in 2 hours. So here's some more. And what you can see here is the market was going out, 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 and the red bar comes back in, but it's already touching the middle line. There's a red bar here, touches the middle line. There's a red bar over here, but then eventually the market goes up. What we noticed though, is that the market, the low hadn't been taken out, and I'll explain this in a short while. There's another one. Over here, the market came outside the line and goes back in. Over here, came outside the line, goes back in, and here. Then this is again more examples. So what we have here is a chart, which is the Dow Jones, that's the US market. It's a 3-minute chart, and we've added the Keltner channels on, and we're looking for the markets to give us signals on a frequent basis. So here's what your setting would look like. This is the Keltner channel. Your period would be 13, and we want to use a shift of 1.3. So there's a little box here which says channel fill, and I'll demonstrate that. It basically fills the channels up with a color. Okay, so that's what it's doing there. So now let me show you what the game plan is here. Let's say, for example, here's a line here, and then here's a line here. Okay, so this is what we call the outer lines. But in simplistic terms, what I'm looking for is something like this. So here's a price bar, okay, and this is the open, and that's the close. I chose candlesticks mainly because it's just easy to demonstrate something. But look, this is a price bar. On the left-hand side, this is the open, and then this is the close. Over here, we have the high, that's a H, and there's the low. You'll have to excuse my terrible drawing here. What I'm looking for is I want the market to step outside. So for example, it could do this and then just this. Then what I'm looking for is the market to go back in. So once it does that, the next thing that I'm looking for is as soon as it goes above the high, I want to get in on this trade to say, right, I want to jump in. I want to see this go up. But what I don't want to see this market do is to go below the low. That's what I'm looking for. Where am I going to get out? Ideally, you can get out at this green line, or if you're conservative, you can just get out at the middle line. That's it. That's what we're doing. We're simply waiting for the market to come outside this line, get back in, aim for here or here. Okay. Now, I've put 2 lines. So this is another line here, and there's another line there. So I would call that the outer line. That's the outer line. And this is the inner line. And that's the inner line there. And that's just the middle line. Okay. So what we're looking to do is either when we get the signal to go in here, to get out here, if you're really want to pushing the trade, then you're aiming for that. But as long as it doesn't go below that lower red line, we're okay. Now, another thing that I'm looking for is if the market's been going up. And I don't care, it can just keep going up. But when it comes down to inside that inner line here, that close has to be inside here. What I'm looking for is, can the next bar go underneath that low? So remember, we've got high and low. So we need 2 numbers. We need the high and we need the low. These are the 2 numbers that we need. This will all make sense when I show you on the platform. So if the next trade actually starts to come down, okay, so it takes out that low, I'm only looking for it to take it out by 1 point. Just by 1 point, I'm quite happy, but normally I'll go for 2 or 3 points. As soon as it takes out that low, I'm targeting this area here. And that's it. This is what we're doing. But we're doing this with something called Keltner channels. It's different. The way it behaves is different to what I've taught in my main program. They both give excellent results. People don't follow instructions. People get emotional. People complain. It's people that are the problem, not the markets. There are some people, and they're actually in this group, which I didn't want to let them on, but their entire life is just built on negativity. Nothing works for these people, no matter what, nothing works for them. And yet you put that in the hands of somebody else and it works. There's nothing you can do. Cut, get them out of your life, not interested. We focus, we move on. We focus on what's happening right now. So basically, this is all we're doing here. Okay. So if we take this whole concept and then say we apply this to the market, this entire thing we apply to the market, and you'll realize that it actually becomes quite simple. So look, I'm going to go in here. I'm going to go into the account and I'm going to show you how to set it up. Okay. So let's just go straight in. Now, this is the platform. So there are a number of different markets here. So these are all the different markets. You've got cryptocurrency, you've got stock indices, you've got foreign exchange, and then you've got UK shares and US shares. What I'm interested in is the indices, and I'm interested in the US, which is the Dow Jones. So now look over here. We've got Wall Street 30, future, and rolling. Do you remember earlier on we talked about the two different contracts? So the futures contract, this one expires in June. Okay. So if I click on that June contract on the information tab, it tells me the margin required is 0.5%. There's a 6-point spread. It's outside of market hours. There's no commission. And you can trade per point. The minimum trade you can do is 0.5. So like you can do 50 pence on this trade. They offered a guaranteed stop loss and it's 5% away. If I click on this one, okay, so this is the rolling cash. Again, 0.5%, but the spread on that one is 1 point. This is great. It's only 1 point spread. So I can trade per point, 0.5, and they offered a guaranteed stop charge of 3 plus 5%. So look, basically this is Wall Street rolling cash. There are two prices here. If we think the market's going to go up, we'll take this price. If we think the market's going to go down, we'll take this price. Now it's closed at the moment, so these numbers will not be moving. But what we want to do is ideally we want to hit the trade button. Now at the moment I can't because the market's closed, but I can tell you that the order ticket looks like this, except that on the order ticket, this box comes up because it's asking us where do I want to get in. On the trade ticket, there is no order level. There's basically just these two buttons and the amount. So that will be the order ticket, which we'll come back to in a short while. Let's go in here. Let's click on the charting function here. And let me open this up. So I'm going to click on that. It's going to open it up into a different browser. Now, let me walk you through the meanings of all of this. So let's start at the bottom here. It's got tick, 1 minute, 2 minutes, 3 minutes, 5 minutes. And so you can look at this on a monthly basis, this chart here. And let me just get rid of these. Don't need these arrows. So we can look at it on a monthly basis, we can look at it on a weekly basis, and then we can look at it on a daily basis or even an hourly basis. And you can even look at it on, say, for example, a 1 minute basis. Okay. I normally trade of 3 minutes. For 18 years, I've been trading on 3 minute charts. Now, at the top over here, you'll notice that the left-hand side, it's toggling on and off the order ticket. Basically, this is the order. So I can say in here, I want to trade $5 per point, and I can quickly get in to go long, to buy, or to sell. But right now, the market's closed. Okay. So over here is studies. These are all the different indicators. And then the display, we can look at candlesticks charts or the bar charts, which I just showed you. Remember the bar chart? If I just zoom in here, I can scroll along at the bottom, or I can use these plus and minuses here. So I can click plus and minus. You see that? Okay. So you notice that there are these 4 pieces of information on the chart. On the left-hand side is the open, the right-hand side is the close, and this is the high and that's the low. Can you see that on this bar, the close is below the open, whereas on this bar, the close is higher than the open. So this is closed higher, this one's closed lower, this one's closed lower, this one's closed slightly higher, slightly lower, this is closed higher, higher, lower, higher, higher. slightly higher and higher. That's it. This is not complicated. This is very, very simple. So over here, this is the order ticket, and I can switch this on and off. Okay, I can just switch all of these things on and off from here. Oh, sorry, that's the information tab. That one I'll be just switching on and off here. Now, if I put my mouse on these bars by clicking on this crosshair, notice that it's giving me information. It's giving me the date, and it's giving me the 4 pieces of information: the close, open, high, and low. Okay, so that's by toggling on the crosshair and this arrow here. And this is where you can draw arrows and so forth. That will come here. You can look for symbols here. So let's go and set this up. So let me do this how I actually showed you in your workbook, just for now. So I'm going to go into studies, and we want to find the Keltner channel. Okay, so here it is. Now look at that. That does not look like what I've shown you in your workbook. So what I need to do is to click, bring the mouse onto that line and right click onto that line, and then go into edit settings. So here I'm going to change that to 13, and the shift is going to be 1.3. So 1.3. Now look at this channel fill. I don't like that, so I want to get rid of that. And it gets rid of that gray, misty area in the chart. Okay, that's it. And then I'm done. I just click on done. So I've got a 3-minute chart here. Let me just zoom out. Okay, now let me just start just quickly showing you. Let's start over here. Can you see how the market came down? But can you see this bar? It's gone inside. If I click the bar, you will see that it's actually closed above the line. Now, if I put my mouse on that bar, so here's the high. Can you see that? And it says the high is 23,598. Okay, so the high is 23,598. And what I'm looking to do is I want to see if the market can go above the high of that bar, but not below this bar, and can it reach the middle line? That's all I'm looking for. So I'm going to put my mouse on there. I've got a calculator here. Let's see if I can actually bring my calculator up for you on the screen. Yes, I can. So here's a calculator, okay? So that high there is 23,598. So I'm going to type in 23,598. Now I want the market to go 1 point higher than that. So there we go. Now, can you see this bar? It went straight up to this middle line area. So the high on 23,672. Take away 23,672. So it's given us 73 points. Now remember, each point is worth $10 or £10 or 10 euros. So if I times 73 by 10, which is the amount, you've made 730 in, look at what time period. Each bar is 3 minutes. Look over here, it says 3 minutes. So 3 minutes later, it takes out the high. That's 6 minutes, and that's 9 minutes. In 9 minutes, you've just earned $730. And you need $590 to put this trade on. I'm just letting that sink in for you. You've earned $730 in 9 minutes. Now, if you had done $5 per point, which is what I was showing my uncle to do, he's earned, 730, divide that by 2, he's earned 365. Now, I hope that you're happy with that amount. Now, let's clear this. So the rules are quite simple. I wanted to step out and get back in. Now, can you see this one? It stepped out and then it steps back in. So let's take a look at that one. The high on that bar is 23,767. So it's 23,767 plus 1. 23,767 plus 1. Then, if I look at this bar here, it only went up a little bit. So when it reaches that middle line, you want to get out. Okay, when it reaches this middle line here, you're looking to get out. And that middle line is at 23,780. So take away 23,780. That's only given 12 points. So 12 points times $10 is 120. If you're going to do $5, that's $60. So I hope that this is simple and clear enough to show you what it is we're trying to do. Now look, it goes up and then it comes back in. If the market steps below the low of this bar here, so look at this blue box, it says date and time, then it's got close, open, high, and low. Now the low is 23,750. So I'm going to put in here 23,750 minus 1, because I want the market to go 1 point below that low. That's 23,749. So I'm going to bring this here. Now, what I want to do is I want to see the market go underneath that low to touch that middle line. So I want you to focus over here because this is where the numbers will be. So notice what happens. If I put my mouse at the middle line, it says 23,709 on the right-hand side of the chart. So we could get out there. Take away 23,709. That's given me 40 points times $10. I've just made $400 in 3 minutes. And you can do this all day long. And that's it. That's it. That's pretty much what I'm showing you and what I showed to people, that you can do this and just get small pieces out of the market per day. I'm not sure if it's good enough for you, but for the average person who is earning £2,000 per month, and that's without all the expenses that they have, if you divide that by 20 days, they're earning £100 per day. Okay, it's about $160, $170. So this is it. Now, I'm just going to minimize my calculator and let me just go back to here. So I want to turn off this crosshair because it can get quite annoying at times. I'm going to go back into studies and then I'm going to go to count the channels again. Look, I'm going to find count the channels over here. And it's now added another one and it looks very messy. So I'm going to right click on that one. I'm going to click on settings, change that to 13, and then change that to 2. I don't like that channel fill, so I just want to get out of that. And there you go. And now I've got 2 lines. So this is the outer line on the top side. This is the outer line on the bottom side. This is the inner line on the top side. This is the inner line on the lower side. And that's our middle line. So sometimes you'll notice the market will go to an extreme like it has over here. And then it goes back in. Okay, so they're just there to guide you. So if you go back, and what I want you to do is I want you to go back and test these. For now, I'm just going to remove that second line because I just want to keep it simple for now. So I'm going to remove that just for the moment because I want to keep your focus on one line. So let's just scroll along here. So I've got my mouse and I'm clicking the left button here and I'm just scrolling along. Let me go and find a trade. Here we go. Let's look at this. See how it came out and then it went back in. So you could look for a trade from here to capture that little piece there. Now, you could, again, this depends on your plan. Are you willing to get in here and not see the market go here? And do you want to get out here or do you want to get out at the top side? So later on, you can see eventually it reaches the top side there. And I'm just going to give you an example. That's quite a big bar. So if you look at that bar, I put my mouse on there. So the high is 23,776 and the low is 23,681. So 776 minus 681 minus 681. What this is doing is telling us that the size of the bar, if we entered here, we are risking 95 points. And is it worth it for you to risk 95 points just to make a small amount? I cannot tell you yes or no, because this comes down to personality. It comes down to risk tolerance. When I told you earlier on, people are going outside their house, even though they've been told not to go out. So everybody has different risk tolerances. Now, over here, the high on that bar is 23. Let's have a look. Let's put this over here. The high on that bar is 23,776. Okay, 23,776. I'm just showing you how much it's moved to reach the top part. So you see over here, that high is 23,926. So if the person was looking to get in here and just get out there, it's given them 150 points. So 150 points times your $10, that's 1,500. That's 1,500 in 369. In about 40 minutes, you've made that 1,500. So I hope that you're just getting the point here, that how we're trading this and what it is that we're looking for. Okay. So let's say, for example, here, it's gone up, it's come back in. Can you see that? But it doesn't take out the low. That bar doesn't take out the low. So we're not interested. It goes up. This one, but it's already reached the middle line, not interested. Let's see if I can find another trade. Now, here it steps out, steps back in, and then immediately that bar does not go above that high, so there's no trade there. These come out, it goes back in. Now that would have gone just, let's say, for example, 1 point above the high. So the high there is 279. And yes, it's gone to 80. So most likely it would have triggered your trade and then stopped you out. So that trade in 6 minutes has lost you money. That one has already reached the middle line. Here's another one. Doesn't reach the low. Now, how long should you wait for it to take out the low? Personally, what I like to see is that I want to see it quickly go above the high of that bar, or very quickly go and take the low out. I like to see it within 3 bars. In fast movements, even 2 bars is good enough. So look, scroll back. Go and open up your account today, corespreads.com.au. It's going to offer you 2 platforms. One is called MT4 and the other one is called CT2, Core Trader 2. The one that I'm looking at is called Core Trader 2. That's the one that you should be looking at, Core Trader 2. And you'll be looking at exactly the same thing as me here. It's the same chart, the same platform. So we're all looking at the same thing. Okay, so that's a very, very simple technique. Now, let's look at something else. If I scroll back here and I change this to a higher time frame, so I'm looking at 3 minutes, but if I look at a 15 minutes chart, you can still apply the same technique, but you're going to get more in terms of points, but your stop losses are going to be bigger as well. So what I like to do, I usually like to switch between time frames. So for example, here, I could see that on the hourly chart, it's been going up. And then I'd be looking for a signal on the hourly basis, even on the 15-minute basis. Okay, it would have been here. But what I will be doing is I'll then switch to another time frame. So I'll switch to a 3 minutes. So if I go, sorry, just excuse me for 1 second. That time was at around 2 o'clock. If I go in here and I go back and look at 2 o'clock, okay, I just need to find around 2 o'clock. The market was going up. So around 2 o'clock, the 15-minute chart and the hourly chart were all pointing outside of the zone here. I'm going to look on a 3-minute bar for a signal, and there was one here, but it's too close to that line. Now, the 2 people that I taught this to, they were taking the trades because they were just trying to squeeze everything out of the trades. It's up to you whether you want to take that style. I personally wouldn't want to take that. There's another one here, as long as it doesn't go above the high of there. The next one, no, but the second one, it does trigger the low and eventually it stops you out. And this is what I meant, that you have to be willing to take losses. There will be some losses. There will be. Okay. So That is the technique that we just looked at in terms of the Keltner channels. Okay, hope you liked that one. The key pointers is that we need market volatility. So we really need the market to be moving. The market needs to continue momentum. That means that when we enter, it needs to continue in that direction. If there's any signs of weak momentum, that indicates we should exit. So let me explain that. Let's say I enter the trade, and as soon as I enter, I see my trades moving. It's going up and down, up and down, up and down, up and down, but it's not reaching for my target. I'm going to cut the trade. I just don't want to be in it. Now, you want to look for a trade where as soon as you enter, it starts moving very quickly. And you'll see once you start applying this on Monday, Tuesday, you'll start seeing the markets move quickly. That's the key. We need that momentum, and we need the momentum to continue. If the momentum starts slowing down, then you want to just get out. You don't want to be holding on to that trade. Hesitation leads to poor execution. That means that if you're placing the trade and it's not doing what you're expecting it to do, and you're hesitating, waiting for it to just reach your profit target, not good. Remember what I said? You need to learn to cut. You need to learn to get out. A profit is better than a loss. Sometimes you'll be in a trade and you'll see that it's working, it's making money, and it reached a, say, middle line, and you're thinking, oh, you know what? I'm going to stay in this because I want to reach for the top line. And then it stops, it comes down, and you're stopped out, and you're thinking, I wish I would have taken that money. Hey, it's going to happen. Good luck. Enjoy that experience, because then you'll know what it feels like. So where should I take my profit? Again, you have to create a plan. It's based on you. Are you happy with conservative amounts, or are you going to be looking for aggressive amounts? This is why I said, let's do this. Let's today show you how to do it. Let's, as of this week, you start applying this and do it for real, even if it's just doing it at $1 a point. Do it for real. Then see what was the process that you went through. What was the mistakes that you made? Where did you get it wrong? I can only help you get things right if you've done it wrong. So I do need you to at least make some mistakes, not on purpose, but just at least make the mistakes as a real life lesson. Now, a quote: an object at rest stays at rest, and an object in motion stays in motion. Isaac Newton. You'll notice that I'm focusing on Isaac Newton today. That's a hint. Those of you that know me, you know I hint a lot. I don't tell you things, I actually hint to you so you do your own work. I'll make mistakes. Why? Because I want you to see if I've made a mistake, and if you've spotted it, then great. I recently gave an exercise just the other day, and I was just watching, and I just saw people go happily, continuously, do the homework, and they don't spot the mistake. Only I think 3 people within a space of about a day and a half had actually noticed the mistake. I won't tell you what it is. But even here, I'm hinting at you about what Sir Isaac Newton is saying. So let's take a look at strategy number 2. We're going to open a Dow Jones chart, and we're going to add from the indicators menu an RSI. Then we're going to change the settings to a period of 21. And then we're going to change the overbought, oversold to 50. And you can change the color of the indicator if you wish. This is a technique for about 30 years it's been used. And it doesn't, I've not seen that many people teach it or show it on the open market, or they have and they've forgotten about it. And it just continues to work. I was in conversations last week with a group of traders, they're a company. And I kept saying that even if you go and look at the old techniques, they're still working. My plan for strategy 1 and 2 was to teach you 2 different things, actually. But then I kind of changed yesterday, and I thought, on strategy 1, I wanted to teach you on a slightly longer term time frame, but I actually want to take you down to 3 minutes because I think it's better to teach you the faster moves. On strategy 2, I had a slight variation of this, but I've simplified it for now. Next week, I might show you a different parameter to show you how you can enhance this. But just to get you started, this is just to get you started for this week. Let's focus on this. So the rules: check the higher time frame for the trend. On the current chart, which is the one that you're looking at, the 3 minute, has the market crossed the 50 line? And if it's above 50, then it's bullish. If it's below, then it's bearish. It's a down move. And we're going to place a stop loss accordingly. So I'll show you the stop losses. So here's the arrows. Those are where it's given the signals. So what's the difference between strategy 1 and 2? Strategy 1, you're going in and out very, very, very quickly. Strategy 2, which I didn't teach those two people, so I'm actually teaching it to you, it's designed to capture more points, bigger moves. So you're not looking at making $200, $300, $400. You're looking at making $7,000, $8,000, $1,000 to $2,000, $3,000. So this means that you'll be holding for slightly longer periods. Now what I've done is I've added the indicator here, and that shows you where, look, for example, here, this was coming down and then it's crossed up. So we're going to enter here on the high of that bar, and we don't want to see the market go below. And then it just continues to go up. Where we're going to exit, I'm going to show you a technique in a short while. Then over here, it crosses to come down. So then we want to go and see the market take out the low of this bar, but not take out the high. And then it comes down. Over here, it says it's going up. That's it. That's all it is. I told you, it doesn't take long to show you. It doesn't take long to teach this stuff. It's very, very simple. So here's an example. Look, can you see that this is negative, and then this is positive, then it's negative. This is all weak, then this is strong, a little bit of weakness here, and then strength, weakness, and so forth. So at this point, we're looking for the market to go above the high of that bar by 1 point, which it didn't happen. Then we want to see the market go below the low of that bar because this is turned negative and the market went down. The market has to take out the high of that bar. You have to give it 3 bars. Doesn't happen. So you have to look for the next positive bar, which is this one. And that doesn't happen. So then it's this one here. So it takes out the high of that bar and it just goes. Then here, the negative bar, which is that one, it doesn't take out the low, and then it turns positive. Now, what if your plan was to go in here and take very small pieces? Strategy 1. What if your plan is to take a little bit more? So do you want to go to McDonald's and have a cheeseburger? Number 1. You want the Big Mac? Number 2. It just gives you more. But your personality has to suit both sides. It really has to fit in with what you want out of the markets. So here, I've just shown you the setting. It's the RSI 21. Overbought is 50, oversold is 50. So that's basically setting the lineup. So let me just show you how we do that. So I'm going to go in here. I'm going to go to the studies, and I'm going to click the cross to get rid of that. So now I'm going to find RSI. So let's go down. Here's the RSI. And as you can see, it's here. So I'm going to right click on that, edit settings. Do you know the number that we changed this to? 21. Then it says show the zones. Yes, just change this to 50 and change this to 50. This was something I used to teach going back 27 years ago. And then I saw other people copying this and teaching it out in the open market, and I just stopped teaching it. But it just continues to work. So I'll click on done here. Okay, let's just zoom in. Okay, and let me bring this up. So if I drag that horizontal line, you can see it more clearly. See, this is telling you the market's weak. It's below the 50 line. This is above the 50 line. It's strong. Then it's below the 50 line, and then it goes back above the 50 line. So if you look at what just happened the other day on Friday, let's go here. Let's bring this down. Okay, let's bring this down here. And just zoom in. So see, this is at the close of the market. It was coming up to Easter Friday. Nobody really wanted to trade. You want to go back and look every time it did these big crosses. This is where we would be stopped at in these small moves here. The market wasn't really doing much there. But just to kind of give you a nice trade example, let's go here. So you see that bar there, the one that you've got in your workbook? It says the low is 23,886. So if I get the calculator, 23,886, it reached the lowest point here, which is 23,488. Now, I'm not saying that's where you would have got out. I'm just saying that's the lowest point. 23,488, 23,488. It's given you 398 points. So if you're doing $10 a point, then it's given you 3,980 in the space of about an hour. But I wouldn't have held on to that trade all the way down there. Where would I have held on to this trade to? So this is where we start adding another indicator. Let's get rid of this. I go to studies and I'm going to scroll up and I'm looking for something called average true range, which is here. And this was the very first chart I showed you today, the average true range. So I'm going to edit and I'm going to change that to, if you remember the number, 5. So what does this indicator tell me? The average true range is telling us how much the market's moving on average. So for example, if we go back to where we took that trade, this one here, I think it was just, let's say that's a trade. If I come down here, can you see that? The average true range? On the box, in the blue box, it says the ATR is 49. So that means that by, let's close all of this off. By taking this trade, you were looking at making 49 points. And 49 points at just $10 a point is $490. Would you be happy with that in the space of about 9 to 12 minutes? Pretty good, right? And if you do this 2 or 3 times a day, look, forget about 490. Let's say the market's moving that sort of movement anyway on 3-minute bars. Let's say you did one trade like this per day, and there are 5 days in the week. You're making 1,225 times that by 4 a week. You're making that in the COVID environment at $5 per point, 4,900, and you paid 895 for this program. That's an insult. That's crazy. And this is one market. And I'm not even showing you how to move. Sitting at home, one platform, one charting package, one market, 2 techniques. Go figure it out. Why are you complaining? You lost your job? Be thankful. Stay home. Stay safe. Enjoy being with your family. These are techniques that we've been showing through Success Resources and through my industry for years and years and years. Nothing has changed except the volatility has changed. It's increased. It's in your favor. What's changed is the platforms are easier to use. It's in your favor. The cost of trading, the margin has gone down. That's in your favor. The cost of the spreads, they've been coming down for years. It's in your favor. We don't go to the office. We don't have staff. We don't do sales. We don't do marketing. We don't do branding. We don't need to find an offer for a product to put on the internet. We don't need to provide a service. We need movement. This market is moving on average 49 points every 3 minutes. Be happy. So I'm hoping that this is starting to open your mind a little bit. And I'm going to just remove this for now. Actually, just let me leave that on for just a second. Let me show you what this is doing per day. So if I put my mouse back on that crosshair, can you see here on the mouse bar? The ATR, the reading on the ATR is 1155. It's saying that on a daily basis, this market is moving 1,155 points. So 1155 points is on average over a 5-day period. Time that by $10, which is what it's worth. It's offering you $11,550 per day. And we're going in and taking tiny, tiny, small pieces out of this. So what we've just done here is to show you some very, very basic, simple techniques. We learned about the market and how it works. We learned about the ticket. What I want to do now is I'm going to show you the platform so that once you start navigating your way around here, start learning about this. So you log in. So basically what you want to do is open up your account. So I would use this one, corespreads.com.au. Open up your account. You need two pieces of identification, a passport, driving license, or passport and a utility bill like a bank statement. It cannot be a mobile phone bill. And you just try to, once we finish this webinar, it's going to take you a few minutes. If you're from the US or Belgium, they won't allow you to open up an account. So for you guys, you just go into Google, type in brokerage account, and you'll get similar functionality like this, but you will not have these benefits where you can choose to do 50 cents a point or $1 per point. You won't have the guaranteed stop loss. But the principle is exactly the same. So again, I was using the Wall Street 30 rolling cash. So these are the two numbers. So if I basically click the order button, that's what these two numbers are. This just tells you how many points it's moved up and what percentage. This tells you the high and low of the bar for that day. If I click on this, it's closed right now. It will open the exact same ticket, which looks like this, but it just won't have this order box. This is something I'll go into next week. So ideally, we're just clicking this when the market's open. Okay, you can set alarms. This opens up your chart. This is the information tab, which basically gives you all of this. And your information tells you the hours that this market's trading, the margin that's required. Look, a lot of people talk about cryptocurrency. Let me show you something. Here's cryptocurrency. And let's take a look at Bitcoin. So I'll click on information here. It needs 30% deposit. I'm not interested. Why would I want to use 30% on a market when I can be using 0.5%? You see that? So your homework is to go through some of these markets. But right now, I'm mostly interested in trading the indices US and that Wall Street 30 rolling cash. Here's the chart. You open the chart up. Then over here, this box, if you toggle that on and off, that gives you your order ticket. Over here, let's just turn that off for now. Over here, this is the crosshair. So if you put your mouse along the screen, it gives you that box. If I turn it off, then it's disappeared. Okay. This is just the information tab that I can do it in this way rather than the crosshair. And then these are tools, like if I want to put arrows and all sorts of things, love hearts and various bits and pieces there, you can put that on the chart. The studies that we looked at, I go into here. Let's look at the easy one, number 2. And that's the RSI. Click on RSI. Here it is. Drag this line upwards. Right click on the line. Click on edit. Change that to 21. And then I'm going to change this overbought to 50. And I'm going to change this oversold over here to 50. I just want to get rid of this show zones part. I mean, it's up to you. You can keep it on there. So it's visible that you can see that it's gone up, it's come down. It's up to you how you like to look at it. Okay, you can change the color if you want. Look, click on edit. And you can change this to whatever color you want. That's green. And if you want it to go into like negative, it's red. Yeah, you can see. Is that clear enough for you? Okay. Then over here, these are the different time periods, but you can also access that from over here. The views is if you're saving any particular views, like the charts. These are the candlesticks that you've got in your workbook, and you've also got price bars. Okay, so that's it. That's the RSI technique. If I go into here, remove the RSI, let's go and add the Keltner channels. So we go to studies, and I'm just going to go and find Keltner, which is K. Wow, look at that, like that. So I right click on the line itself, click on edit, change that to 13. Let's change this to 1.3. Let's backspace 1.3. I don't want the channel fill. And there you go. Okay, that's the Keltner channels. Then I want to add a second one on. So I just go back to Keltner channel over here. It will add a second one in. Right click on there, click on edit, go back to 13. And then the second one, you want to change that to 2. Okay, and get rid of that channel fill. and click on done. So that's the outer line, inner line, and then this is center line. Now, these are Keltner channels. There are other indicators out there, but they kind of give you very similar information. What I like about this is that I can just click this, and as soon as I see a trade moving, I'm already ready. I've got my amount in there, which is 5. So let's say, for example, I see this one. It's come out. It's going to go up. I've got my eye on it. And as soon as I see this market popping up and it takes out that high, I'm going to hit that buy button and I'm in. Then once I'm in, I can't show you now because the market's closed, but I'll show you later after a tea break. Once I'm in, I'm either going to put my stop loss here or I can manually watch it. And that's what I do. I manually watch it. If it goes below that low, I'm out. I just close the trade. So how do I close the trade? Over here, let me just show you. Once your trade is open, it will be here. Then your ticket will be here. You can actually just close it by just clicking X and it will allow you to close it. Okay. It's a shame the market's not open today. If I get some time this week, what I'll do is I'll try and jump onto a live webinar for you guys, if that's okay. If I get some time this week, then I'll show you once the market's open and we can go through it. Okay. Otherwise, we're going to get together next Sunday anyway. But I'd rather just jump into at some point this week, if I can just jump in and just do maybe an hour with you, then I can show you that as well. And that's it. Okay. So very simple, really, really simple techniques. Let's go back in here. Now, the key pointers, we do not need market volatility for this one, for the RSI, because it can chop up and down sideways. It's just when it crosses that 50 line. The market tends to continue momentum. That means it will just tend to stay in the motion. And if we see a bar cross over the 50 line, if it's above the 50 and it crosses below, get out. If it's below the 50 and it gets above, get out. And hesitation leads to poor execution, and a profit is better than a loss. Now, if you've been following me for a number of years, and there are certain numbers, like, for example, 50, hint, there's a meaning behind it. Don't just think it's a random number. There's a meaning behind it. And we use that number on different indicators. So there's a technique in the Fast Profits trading strategies, the 2-day workshop. You know how we use that one for very long-term moves. Even if you use that technique in the current market, I just did a student webinar recently, you would have seen it's given us phenomenal profits, really, really, really great profits. Okay. So those are the two techniques. Look, here are the results. Let's just very quickly examine. So what was he doing here? Look at I don't know why he's got 1 on here. Now, this is not core spreads. This platform, this has a 14-point spread on the Dow Jones. So that means he's leaving a lot of money on the table. The core spreads platform has a 1-point spread. It's so much better. So over here, it's Wall Street, went long, so he bought. That's the opening price, closing price, made a profit of £252 on the £5 position, 457. And there were losses. Look, there were losses here. So what's the date here? That's the 18th. His profit is 252. Then on the 19th, 457, 487, 552, 53, 180, 697, 322. Because remember, the market's going to be moving in different amounts. And it depends on where he's pulling the profits out, if he's looking for weakness. So I'll come back to this after the break. So look, on the 20th, 290, lost 192, 22. Over here, 125. And then the next day, 842, 762, 203, and so forth. That's a lot of trades on that day. Okay. 25th starts off with a losing trade, then there's a winning trade, winning trade, winning trade, and a losing trade. Then another win here. Okay, so some days are not that great. And then this was 26, 27, all the way up to here. I'm trying to see if he's had any big wins. Not really. He's been quite consistent, actually, on these trades. There's some big wins around here, 842, 762. But you see that he's aiming for fairly conservative, small amounts, and the markets are moving considerable amounts on those days. Remember, at the moment, the market's moving 1155. At that time, it was moving close to 1,300 points a day, 1,400 points. And then here, 217, lost 482, made 467. And when did he, I'm trying to think, where did he end these trades? And that's on the 2nd of April. What date are we today? So that was taken on the 4th of April. The snapshot was taken on the 4th. Okay, so look, they add up. You might think, oh, it's not a lot 15, it's not a lot 40, it's not a lot 15, 102. They start adding up. And especially in the current environment, because there's just a lot of volatility, the opportunities of jumping in and out. This is only strategy number 1, not number 2. I haven't taught them number 2. They've only done strategy number 1, nothing else. Spent about 20 minutes, 15 minutes explaining it. Spent more like an hour talking about the psychological part of it and teaching them how to just get out when the market's going against them. So for a beginner and starting off, the losses are not that bad. I'm pretty sure, I know there was a couple of trades where it was going against him and he held on. That was the wrong thing to do, waiting for it to come back because he used multiple time frame. Here's an example. Look, there's losses along here. 67, 695, 51, 15, 212. But all in all, £2,000 account, no experience in trading, had traded shares before, invested in shares before. Uber driver, not bad. And then here, look at this one. This is the core spreads platform. So your core spreads charts, the results will look like this. So that's 405. But look, short at $10. Look, they're all Wall Street, so they're all Dow Jones. Short, this one's long. Made 405 market coming down, 110 coming down, $40 going up, 475 coming down, 280 coming down. I can tell that because it's minus 10, which means that the person, she went short. This one is 10, she went long. Okay. I remember speaking to her, I said, why are these at 1,000? And she said, oh, I just had a target. I said to myself, if it goes to 1,000, I'll just take it. No matter if it went higher, I'll just take the 1,000. So that's her plan. I don't think it's a good plan. I think you take what the market's giving you. But, you know, I can't tell you what to do. It's entirely up to you. This, let's go back, sorry. This is the 2nd of April. I think is it the 2nd? Yes. This on April the 1st. So this is the 2nd of April. And then that was the 3rd. Okay, so that was the end results. And I got this off the WhatsApp. She sent me the WhatsApp, so I had to take the name out. She will come forward. She just can't at the moment, but she will come forward and hopefully meet you at your events and tell you who she is and what she went through. And dear Sandy, thank you for allowing me to be the test subject of this one strategy that will now allow me to take back control of my life and finances. This is really what it means to be in control of one's financial future. You explained the strategy to me on April the 1st over the phone, and I tried it the next day. I tallied my trades yesterday on April the 2nd, and I did 19 trades at $10 per point, made 10,779.22 in one day. And then this is no April Fool's joke, but the best April Fool's gift ever. I'm infinitely grateful and deeply encouraged to continue trading responsibly with this method. It sounded too good to be true when you explained it. Well, sorry. But it's changed my account size drastically in one day. I'm still letting the results sink in. Then on day 2, April the 3rd, here are my results. Slower day, 12 trades, $10 per point, 5,835. Take that virus. Sandy, this is incredible. Still feels unreal, but it isn't. Thank you doesn't even begin to express the depth of my gratitude. Why you shared this with me, I don't know. But this, I'm trying to think where I am. But this is something that ordinary people like us should all be made aware of. Powerful is an understatement. As a wife and a mother of 3 children, this is something my family can benefit from, especially given the current lockdown situation in Asia. So look, I'm hoping that you guys can come back, and on the Telegram, I can see nice messages, good or bad, doesn't matter. Just want to see what kind of results you've had. So what we're going to do, I'm going to give you I don't want to do 15 minutes. I'm just going to give you a quick 10-minute break so you can go to the bathroom, stretch, do whatever it is that you're going to do. Luckily, you're not in the Success Resources events where you're going to be doing high fives and massaging each other, because I don't allow that. But you can pre-imagine in your head that you're doing that if you miss in the Success Resources environment. But for now, a 10-minute break, just 10 minutes, please. And then let me just go back and I'm going to give you a bonus trade. I'm going to show you another one. Yes, you only paid for 2, but I'm going to give you 3. And then we'll do a quick Q&A session. Okay, 10-minute break. Thank you.
Thank you, Sandy. We're going to see you in 10 minutes, guys.
once said, the will to win, the desire to succeed,
What takes guts is to put yourself on the line.
the urge to reach your full potential.
A leader makes the way.
These are the keys that will unlock the door to personal excellence. Success Resources is the world's leading events promoter of business, personal development, and wealth creation programs. For over 30 years, we've helped over 10 million people across 30 countries unlock their full potential. From North America to Europe to Africa to Asia to Oceania, we are the key to your personal success. We open the door to the world's best speakers such as Anthony Robbins, Sir Richard Branson, Robert Kiyosaki, and T. Harv Eker, to name a few. We have over 500 events a year and access to the greatest thinkers, achievers, and motivators of our time. We guide you to the success that lies in every one of us.
But you will not discover your greatness in your comfort zone.
We have never really truly reached our destination. There's always another level to strive for. Your best is yet to come. Success Resources, your learning partners.
Welcome back. Okay. Hope that you all guys got some water, and I'm going to pass it now back to Sandy. Here you go, Sandy.
Okay, thank you, Nikki. Okay, right. Let me just go to here. Now, let me just say a few things. I've just managed to have a quick look on the chat group. So I'm seeing good questions, bad questions, funny questions, funny questions. I can't hear him, or his voice is too loud. Turn your mic or your headphones up or turn it down. I didn't write down what was on the blank lines. Okay, let's do a recap here. Let's go back to the very, very, very beginning of this program. The objective of this program was to do something online so that you could do this from your home. Now, there will be some restrictions. I can't see you, you can't see me. We can't do a live Q&A. That means that you ask a question on a microphone that everybody can hear and that I can answer it. So it's going to be practically impossible to answer every single one of your individual questions. But what I've done is I've had a look overall, and I can see where the gaps are, the overall gaps on where people are not understanding something or just little gray areas. So this program today is 4 hours, which we've done. So that's okay. I'm not going anywhere. I'm still going to give you some extra time. It's okay. But what I've also said is this, that you need to be released after this program. You have to get your account opened up. You've got to deposit the money into your account. You've got to get your first trade on. Then when next week arrives, I want to look at, and you need to look at, what we all did as a group. And then there will be mistakes along the way, and there'll be some people who does very well. Everybody's at different levels. We're not competing with each other who's going to do well and who's not. So remember this, it's a 4-hour program, but I did say to you that I'm going to create a private chat group just for you people. Now, that means that if, let's say, for example, you're a husband and wife looking at this on the screen today together, you're not both coming into the chat group. The price was $8.95 for one person. So whoever has paid Success Resources the fee, you will be entitled to come into the chat group because we'll be monitoring that. And that chat group is all about asking questions. And in the chat group, I can send you pictures of trade examples. Please don't panic. Breathe. Just take a breath in, breathe out. In, out, 3 times. Once you've traded this week and we do a reevaluation next week, and I'm sure there's going to be some really bad results, and I'm sure there's going to be some really good results. That's just the way it works. But the week after, I'm going to go in and show you live. Some of you say, why can't I show this live right now? Because the market is closed. It's closed right now. I can't show you anything. I would have preferred to have done this on a weekday, but I get some people saying I can't do it on a weekday because I'm still working, or I've always got people with different excuses. There's the old classic saying, you can please some of the people some of the time, but you cannot please all of the people all of the time. So please, just calm down. We're going to go through what I've just showed you, because it's like watching a movie. First time you watch a movie, you watch the movie. Second time you watch the movie, you see things that you didn't see the first time that were there, but you just didn't get it, or you missed out, or your brain was somewhere else. So let me just do something. I'm going to go to the whiteboard, okay? And I'm going to come here. Let's start with strategy 2, because that's the easiest one. Watch this. Let's pick a color, blue. Here's a line, okay? And that line is called the RSI. It's the relative strength index. What this is doing, in essence, is it's measuring the momentum. That means it's measuring the movement of the market, but it's also measuring the volatility, the rate of that movement. Okay. Now, you don't need to worry. Honestly, you don't need to know the ins and out of the RSI. What you need to know is this. So, can you see this line, this squiggly line? Okay. Can you see that sometimes it crosses to go above and sometimes it crosses to go down and so forth? Teach a different variation of this in the 2 days program to do with the moving average, but this is very different because we're now basing this on the strength and the volatility of the market rather than the price of the actual instrument. So what we're doing here is this. When the market does that, great. It's telling you that, you know what? The market right now could go higher. So what we do is we come up to the top of the screen and we look at the market. So what we're looking for is a price bar. So for example, a price bar is like this. As soon as we see that indicator go above there, we're interested. And we're interested in the price bar. It's above the blue line, so we're expecting the market to go higher. Great, so what shall we do? As soon as the next bar opens and it goes up, and you see it, because you're looking at 3-minute price bars. People are saying, can I try this on 1-minute bars? Can I try it on 2-minute bars, 5-minute bars, 10? You try whatever you want. I'm teaching you on 3-minute bars. Why are you complicating this? If you want to do it on 1-minute bars, please go ahead. Try it. But I'm teaching you on 3-minute bars. There's a specific reason. It works. Sometimes the volatility is high, which means your stop loss will be big. Hello. Welcome. We are from the very beginning talking about volatility. Volatility is the increase in the range of the price movement and the speed. So yes, the volatility is high. It means that the risk is higher. When the volatility drops off, comes back to normal, and the market moves 300-400 points per day, you will not have the stop losses as big as they are right now. But the rewards will also be less and it will take longer. So at the very beginning, I said, does this suit your style? Look, you all want to make money. Along with that comes some risk. You can meet this woman walking down the street and you think, wow, I really like this person. Let me go and talk to her. And you talk to her and you find out that she talks so much and doesn't let you speak at all. Does it suit your character? A lady might meet a gentleman at a restaurant, and then she really likes the guy and says, I like this person. And she goes to talk to him and he doesn't say a word. Both of those people have different personalities, different characters. Which one do you like? Which one is right for you? This market right now is talking a lot. It's moving a lot. If you cannot handle it, this is not for you. If you like the fast price movements and you want to be in and out and you want to go sleep at night with no positions on, this is for you. Okay? You can please some of the people some of the time. You cannot please all of the people all of the time. So, this technique, the market's just gone up. It's taken out the high of that bar by just 1 point. Great. I don't want to see the market go below the low of that by 1 point. In my classes, I usually teach -3 points, +3 points. That's what I like. But you can use 1 or 3. That's your choice. Where shall I get out? Okay, so now you're in. This market's going up. It's going up, going up. Where are you going to get out? I don't know. If your plan is to make $50 per day, as an example, the market just went up in a space of about a minute, you're sitting on a $50 profit and you just took it. Was it a good trade? Maybe. If the stop loss was going to lose you $100, say $300, and you took $50, you risked 300 to make 50. Was it worth it? No, because if you lost the 300, how many $50 trades would you need to get right to get back to break even? So that's something you have to think about. Then, is there a better way to exit? Of course there is. So what we're doing here is I'm teaching you a way to exit is like this. Let's say, let me do something here. Let's just get out of all of this. Let's say, for example, the RSI has just crossed above the 50 line. So remember, this line is 50. Oops. So this line is 50. Okay. Now the RSI itself, the setting is 21. Okay. So the market, the bar is here. That's the open, close, high, low. As soon as the market goes higher than that, and it takes out the high by 1 point or 3 points, we're in. We are entering this market. We want to see this market go up. What if the market, the next bar, doesn't go above the high? Then you're not in. It does not validate the trade. You're just not in. Nothing's happened. Now, if the market goes up, you could do this. You could look at that indicator, which I showed you, the average true range. And that average true range said the market was moving 49 points every 3 minutes. 49 points at $10 per point is 490. If that market shot up at 49 points the next 3 minutes and you're making 490, would you be happy? Then close the trade. That's one way of exiting. You either exit if it stops you out, or you exit if it's reaching that average true range number. Or you could say, I'm going to stay in this trade until this does the opposite, which closes below. By then, the market could be up here, up here, up here, and then suddenly it starts coming down. So your profit is probably going to be much more than 49 points. Test it. Have a look at it. Go back and try it. You have the parameters. So you need to look at this. Okay. So we've looked at how to get in and we've looked at how to get out. Now, just show something else. Let's try and get rid of this for now. So once again, this is the RSI line. This is the indicator. That's at 50. Okay. When the actual indicator itself goes above that price bar that you have, you want the next 3-minute price bar to go above the high of, there's the high. You just needed to take out the high. I like 3 points, but the minimum of 1 is fine. I like 3 points. As long as we don't see the next bars do this and take out the low of this bar, that's not what you want. You don't want that. But if the market continues to go up, the question is, where shall I get out? You can get out by looking at that average true range indicator. The average true range said it was moving 49 points. When the volatility increases, that might go up to 70 or even 100 plus points when the volatility decreases, it might be 20 points. We don't know. You have to wait until it all happens. I like using this as my exit target. So instead of just randomly saying, let me get out, I like to look at the average true range and say, hey, the market's offering me 49 points right now. If I take this trade and it's giving me 49, I'm taking it. I'm done. That's a nice way just to bank a profit. So that's one way. There are much more advanced ways. There's absolutely no way here I can teach you all that. That's why, look, speak to Success Resources, try and get yourself onto the Fast Profits Trading Strategies 2-day program, because there's so much more that we cover on there. This is a 4-hour program. So you can use candlesticks as a method, which I'm not going to teach you, not on the 4-hour program. The candlesticks will give you an incredibly nice way of managing the risk on that trade. Okay, so that's that one. Now, let's go back to the Keltner channels. The Keltner channels, this is what we're looking for. This is the outer line. This is the outer line, and just call this the middle line. Okay, for now. What we're looking for is, let's say the market's gone up, and it's gone up, and it keeps going up. I'm waiting for the market to come back in. There you go. So now, let me just draw this. Whoops. Now, what I'm looking for is the next bar to just drop 1 to 3 points below that low. I'm going to enter. My stop's going right here. I don't want to see this market go up. And this will be moving fast. Then I see this. This is what you're going to see. Get out. Close the trade. Get out. It's done. Unless your plan is to sit and wait for it to go here, which it might do something like this. Took longer. What's your plan? Where do you want to get out? How much money are you happy collecting from what the market's giving you? You have to create your own plan. Your own plan. The techniques for getting in and out are the same. You get out if it stops you out, or you get out if it hits the middle line, or if you want to target this line. Now, let me just go back a little bit. Why did I create another outer channel over here? So we added 2 Keltner channels. Because the market has extreme volatility right now, that means it's moving a lot. Sometimes what you'll find is the market doesn't just go from here to here. It actually stretches out there. And the way the human mind works is that when the market is going outside here, you're questioning, how far is this going to go? So by adding the second Keltner channel, it allows your brain to relax a little bit, because then you'll see, oh, okay, well, it's reached this level. You're looking to close the gap, the question in your mind. That's what's happening. So in extreme levels, we very often see this market reach these outer Keltner channels. Once the market goes back to normal volatility, which when the market settles down, in my market will go back to normal volatility in 2023, late 2022, 2023 early. Right now, this volatility is fantastic for intraday trading because the stop losses are smaller on the 3-minute bars than the daily bars. On a 3-minute bar, your stop losses could be 20, 30, 40 points, even as high as 60, 70 points, even higher when the volatility increases. And on a daily chart, the stop losses is 1,200 points. So try to understand the stop losses on the intraday charts are smaller than the daily bars. So once this bar comes back in and it crosses this line here, it's this line here, I'm just waiting for the next bar. I usually give it 1 to 3 bars. I just like to see the next bar just trigger that low. You can see it's gone below that low. So what you've got is you've got this order ticket, the core spreads order ticket. There's a box here and there's a box here. And then there's a little box here. Okay. So in that box, you're putting the dollar amount. So let's say you do $5 or $1, doesn't matter. This box is telling you that it's red and this one is blue. What does it mean? It means that if you click that box, you're expecting it to go up. And if you click this box, you're expecting it to go down. So here, because the market has gone up and come back in, we're expecting it to go down to at least aim for this one, if not that one. So I'm going to put 5 in there and I'm going to hit this box and I'm expecting this market to go down until it reaches here. Now, in the core spreads platform, you will have a position, the ticket will be sitting. I can't show you right now because the market has closed. But during the weekdays when it's open, I can show you a live trade. So you'll see it. But when that order is sitting there, you can just click on it and it will allow you to close the ticket, to close the order very quickly. Best way to learn is actually put your first trade on. You'll see. Just do 50 cents per point just to start with. Okay. So what we're doing is we're waiting for this market to come down. Now, if I want to see the market go up, then I could do something like this. I could wait for the market to come down, come down, come down, come down. Then it goes back in. It's closed. Okay, that close is just above that line. Then I want to see the next bar go above the high of that bar. Great. There are going to be 2 boxes here. There's the blue box. Then there's the red box over here. Okay, and then there's that box over here, which asks you how much you want to trade. I want to do $5 per point. I'm looking for the market to go up. So I'll click this button here. I'm in. I'm now long and I want to see this market do that. I can get out, or I can look at the average true range and it says 49. Okay. Hey, can you please reach 49 points? When it reaches 49 points, I'm out. That's where you can be consistent. Where that lady did 1,000, 1,000, 1,000. If the market's offering $1,000, then you can say, give me 1,000. I'm looking for that $1,000 move. Okay. So that's it. That's all we're doing here. Let me just get rid of this. So let me go back to this platform. Okay. So look, let's go to Wall Street rolling. Let me click on this chart. Okay, let's get rid of all these indicators. And let's start from fresh. Okay, let's start again. So this is Wall Street rolling. Please pay attention. Stop looking at your watch, your phone, and your workbook. Focus on the charts because you're the ones that's asking too many questions. Look here. Open the chart. Now I'm going to go in the chart. I'm going to click on studies. So I want to find the Keltner channels. Here it is. There's the Keltner channel. Click on the line, then right click on the line. Click on edit settings. I'm going to change the period to 13 and I'm going to change the shift to 1.3 and we're going to keep that. It's been working fine, even in low volatility. This works fine. So I changed the channel fill and there we go. Because these bands are moving to the volatility of the market. So I don't need to change anything. So now let's look, let's come down here. It's come down, it's come down, it's come down. There you go. You see that? It's closed inside. I want to see the next bar go above the high of that, which it does. I don't want to see it go underneath that low. I just want to aim for that middle line. That's one exit technique, or I want to see it reach the top line. That's another exit technique. Which one is right for you? I don't know. If I click here on the average true range indicator, I change that to 5. And that's telling me how much the market's moving on average. So let's click on this arrow or even not the arrow, if I click on this info box, if I click on that info box just there, look. Oops. Let's try again. See that bar? It's telling me that's the high of the bar. It's 23,598. So it reaches the middle line at 641. So let's call it 640. Take away 8. That's 42 points. So from the high of this bar to there, it's 42 points. Let's clear that. But what is the average true range when the market was trading at that bar? You can see the ATR says 71. So you can say, the market's offering me 71 points on average right now. Should I take the money when it goes to the middle line, or should I aim for 71? What's your plan? Okay. Now remember that you've seen the market here, it's come down and then it's gone back up. Your stop loss is sitting there. So you can do this. When the market starts moving in your direction, you can go into here. Your order will be sitting right here. You can click. I can't show you right now, but you can click on this and it will say amend. And then you can change your stop loss to exactly where you entered, and that trade will become risk-free. It means that if it comes down, it stops you out, it's cost you nothing. It's a free trade. Okay, just can't show you because the market's not open. But during this week, when I open up the chat group, we will all be in there, which means it's going to be a party. It's going to be extremely noisy, like everybody's drunk. It's going to be extremely noisy. But the purpose of the chat group is for everybody to help each other. Some people are advanced traders and some are beginner traders. So I'll go through the chat group rules in just a short while. But I will be sending you images of that in the chat group. Okay, so if I go back to that chart, okay, there's the Keltner channel. If I want to add the second Keltner channel, I just go back into here, look for it here, add the second, right click on the line, edit the settings, change that to 13, and then shift that to 2. It's a setting of 2 periods. So there we go. I don't like that shaded area. So let's get rid of that. Okay, click on done. So what it's there for is that sometimes when the market's moving extremes, it usually goes and touches that outside line. It's just to tell you that the market's really moving a lot. Now, if you want to do 1 minute bars, please go ahead, go and have a look. It's up to you. If you want to do 1 minute bars, entirely up to you. If you want to do 1 hour bars, up to you. If you want to do daily bars, up to you. But it's not what I'm teaching. I'm teaching you to do the 3 minute bars. Okay. So there you've got the average true range and you've got these settings here. So we're going to keep going through this all week. Now, it seems like you're not listening, you're not paying attention. So there's no point me giving you the extra bonus strategy. So I'm thinking, we could just leave that for another day. And let's see, let's get out of these studies here. Okay, I'm trying to see where my chat is. Oh, please, please, please give bonus. I want bonus. Why? Guys are crazy. Okay, Catherine, we are listening. Okay, all right, let me just turn off this chat. Watch this. Studies. Come down. And then I've got to see if it's actually on here. No, let me just show you this one for now. Let's just zoom out. Okay. Let me just zoom out for here. Now, can you see this green line and this red line? Just zoom back again. What it's telling you is this. When the red line is above the green line, can you see this over here? When the red line is above the green line, it means the market is weak. Then can you see here? Let me just try and zoom in for you here. Can you see the green line is above the red line? It means the market's strong. If the green line is on top, we expect the market to go up. If the red line's on top, we expect the market to come down. Okay, so that's a nice trade, actually. There's a nice big move to the downside. So what you're looking for is when it changes. So it's changed here, just over here. Over here, that red line went on top, which means the market, we're looking for it to come down. So it came down quite significantly. It tells you the market's weak. We're going to enter here and put our stop loss here on the high of the entry bar. But how to get out? There are a number of ways. You can wait for it to change back to green. But then I find that sometimes you can give back quite a lot of profit. But that's just one way. I still like the average true range. I like the fact that it gives me a definitive number to say you can exit here. Can I do trailing stop losses? You can. It's not something that I use. Later in next week's class at the Sunday, I'll talk a little bit about the trailing stop losses then. I don't want to flood too much information into your head. Not at this stage on a 4-hour webinar. It's too much. That is why I said to you, I will do 4 hours today. I'll do another 2. Knowing me, it's going to be 3 hours next week. So we'll get another 3 hours next week. If I can fit in a live session this week, I will try. But if not this week, then the week after next, I'm going to do a live session anyway. We'll have a chat group. I'll be sending you pictures in the chat group of the charts. And if you've missed out filling in the blanks because you went to the bathroom or whatever it is that you were doing, you will have opportunity because we'll be able to talk about that in the chat group. But this is a nice little technique that the Core Spreads charting package has. Now, I don't like it here because it's very choppy. See here, it can be very little choppy. So one thing that you could do is you could keep an eye on the long-term time frame, like the daily chart, for example. Okay. So can you see here the red line crossed the green line? Okay, so let's go here. Can you see that? That date was the 24th of February, which is this date here. And that low is 27,902.902. So this was going up, which means the market should be coming down, which it was, until this date, which the green line has just crossed here. And the high on that is 22,783. So that's given you 5,119 points. If you're doing $10 a point, that's a nice 51,190 on an initial deposit of $1,400. Not bad, but these are the long-term moves. So what you can do is you can say, okay, right now, the green is above the red right now. So when I come down to my 3-minute charts, what I'm looking to do is to ignore the red ones, but just take the green ones because it's telling me that the overall trend is bullish. So I'm only looking to take when the green line crosses. Okay, I'd ignore all the red lines. So the green has to be on top. The green has to be on top. The green has to be on top, and here's one over here. There's another one over here, and so forth. Okay, so it's a nice little technique. I'm just showing this to you because I want you to have a look at it. And when I do the next session with you, I'm going to give you another technique. So you're actually going to have 4 different techniques that you could look at. And that technique's a nice one because it's to work with the trend. But I'm going to save that for now because think brain is overloaded. It's just too much for you for 4 hours. It really is, actually. It's quite a lot for 4 hours. So what we will do is I'll give you another session for next week. Now, let me just go back to the presentation just to finish off a few things. Okay, here's another trade. This is the Aussie dollar versus the US dollar. It's a daily chart. Keep an eye on this date, April 16th to May 22nd. Just keep an eye. Hint, birthday. There it is. Okay, so those of you that have been sending thousands of messages, no, it's not until April 16th, and I'm not really interested in birthday. So thank you in advance for it, but don't worry, I'm not interested in the birthday. What I'm interested in is for you to get a gift. Hopefully the market will give you the gift. And now look at this. In 2017, that arrow there, you see that? That's when we're looking for a trade for the market to come down. So I was looking at those signals that I was showing you. I'm looking for the market to give me a signal, which is this red bar, but I don't want to see the market go above the recent high. And I want to hold it until the date. I got out. Okay, that's 2017. Then there's a nice trade over here. That's a big one. 2019, there's a nice trade over here. Here we are right now. So at the moment, the Australian dollar is sitting up over here. Now I've got a trend model on here, which is shown by this, which tells me this market's weak. When it's green, it tells me it's strong. When it's red, it's telling me it's weak. So what I'm looking for is I'm going to look for a signal for this market to tell me that it's weak, and I'm looking for it to go down. And I will look for it and I will send it to you in the chat group. So I'll walk you through it. Okay, so I won't just leave it here in the chat group. I'm just going to walk you through that trade as and when it arises. And then we'll look at how to enter the trade and see if the Aussie dollar is going to weaken against the US dollar from middle of this week until the period of May. Okay, so that's just another bonus trade that I'm going to give to you during the week. What we know is a drop. What we don't know is an ocean. So Isaac Newton, there's so much more to know. And you've only just learnt the drop today. There's so much that I want to give to you, but it's the time limitation, it's the technology limitation. So please, please, please don't panic. We've got a whole year. I'm giving you access to the chat group for a whole year. When I see trades like that Aussie dollar in other markets, I'll let you know as and when they come. Okay, so that's just a bonus. You've paid $895. Honestly, I've never in the history of what I've been offering offered something like this, never. And I don't really want to say that I don't need the money, because I don't. But what I'm really trying to hint to you is this one thing about creating your own economy. Please understand that there are other ways of making money rather than complicating things in life. There's so much more to learn. Success Resources is a company. I'm quite happy to be with them. They're a giant in their industry, and what Richard's done is just incredible, what he's put together with Veronica. And the team at Success Resources are constantly working around the clock. And just to go out there and show people that we really are in this ocean of knowledge. There's so much to learn. So keep in touch with Success Resources. Keep learning. I'm going to be in touch with you for this whole year for this particular module. There's a lot to learn. Singapore, I'm looking forward to seeing you once they've lifted the restrictions. We've got a program there for $125 for a whole day. Success Resources Singapore is handling that. So once they've lifted the restrictions, then I'm going to be doing the program with you. But I have to wait until Singapore lifts that restriction. So next week, we're going to relearn everything we did today. Trust me, it will be clearer, because second time round always is clearer. Then, by then, I'm going to have a look through the chat groups during the week, because we'll have a whole chat group together. Any questions on there, I'll compile them, and then we'll cover them in that part 2. What I want you to do is to immediately go get your account sorted out, at least get your first 2 or 3 trades on this week so you can start practicing immediately. That's the only way you're going to learn. Then we'll review the week in action. So we'll go back next Sunday and have a look what happened this week, Tuesday, Wednesday, Thursday, Friday. And we'll take a look at the trades that worked and the ones that didn't work. How would we have handled it emotionally? How would we have handled it from a risk side? How would we have handled it from a trade entry exit side? Then we'll do another Q&A session because I'll have a list of all your questions by then, and hopefully celebrate what you've achieved. Okay, so like you said, we've learned something. Hopefully this is at least a small drop in the ocean of what you've learned today. And another quote, we build too many walls and not enough bridges. Isaac Newton again. So instead of slamming your head against the wall, why don't we start creating bridges, finding pathways to new ways of learning, new ways of doing things? Businesses will have to change in the current environment. You will have to change in the way that the world right now. You're going to have to look at different ways of bringing revenues in. So this is what we're going to be doing. So I want to say thank you. Thank you for those of you that had sent the videos. I'm actually going to just make a really cheeky little request. Please, 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 do you mind doing a 1 or a 2 minute video of yourself from your iPhone or your Samsung? Some of you that sent the videos in, wow, the quality, I don't know what camera you're using, but it's just fabulous. But do you mind sending a 1 or a 2 minute video just from today? Don't worry, we've got weeks to come. I'll ask you to send other videos later. But just on how did today open your mind? Did you enjoy it? Do you think it's valuable? Was it worth for you to come along to join this program, even though it's online? That's all I'm looking for. The more I get from you, the more I'm going to give you for next week. So it's not a bribe. It's just that's just the way that I am. It's like if you're in a conversation, if the other person doesn't talk, then you don't talk much. But if they talk, then obviously you talk back. Okay, so please, please, please send a video. This webinar is not recorded. You've got to be kidding me. Online, record a webinar and give you the workbook, which I've never done in my life, as a PDF. It's a recipe for disaster. A number of people just come in, they copy it, and next thing you know, it's all over the internet within 48 hours or 24 hours. No way. This webinar will replay again next week, and then we'll do another one, a live one. If I can get a chance to do it this week, I will. So first thing I need to do is download something called a Telegram app. I think a lot of you already have it, and I'm going to send you, or Success Resources will send you a link on how to join the group. That will be done tomorrow. Okay, it won't be done today. It will be done tomorrow. So today, just download the Telegram app, apply for your account at that coursespreads.com.au or South Africa or the UK, whichever one you like. And then apply for the CT2 Core Trader 2 platform. That's the one, not the MT4, it's the Core Trader 2. And then you're pretty much good to get going, okay? And then please, please, please make sure you've completed the survey. So this is the survey link, https://t.ly/Sandy survey 2020. Okay. Now we've done more than 4 hours. We've gone for 5 hours plus. We started at 1. It's now 6 o'clock. I really hope more than anything else, this has opened your mind. Opened your mind to see that what we're doing from home is really a home-based business, if you want to call it that. But we're in lockdown. We don't need to go out. We can just do this from the comfort of our homes. Now, I want to say again, finally, a big thank you to Success Resources. There are so many people. I just cannot name all of them on here, but there's too many, from the South Africa team to Singapore, Malaysia, and then you've got London, Malaysia, Australia, India. There's just all around the world. Success Resources are the company that's literally global company in terms of education. And they're working on a big project which they're going to launch soon for online training, just for, I think it's this month and next month. So keep an eye out for that. They will give you the information on that one. I don't have the information at hand. I'm going into a consultancy period for the next couple of weeks. I'm going to be very, very busy, but I will be in touch with you through the chat group, basically. I'm looking forward to being with you in this year, but hopefully in the next few weeks. But I'm really looking forward to hearing from your video testimony. If you can do that in the next hour, at least it gives me something to look forward to in the next hour. Really looking forward to hearing from you and seeing you. Just looking to see if this has opened your eyes, and if this can be a home-based business. Would you recommend other people to do something like this? For me, I'm looking forward to seeing you in person. I'm looking forward to the coffee get-togethers. I'm looking forward to seeing you at our meetups. Looking forward to the one-day program in Singapore. I'm looking forward to seeing some of the people in Dubai, UK, but literally all over the world. I'm just waiting for Success Resources to announce the dates, and then hopefully we'll meet again. But I'm going to hand this over to Success Resources. Really looking forward to hearing from you. I just hope that this has been worth it. It's $8.95. I hope it's been valuable for you. And I've only just opened the door. We've still got more to come. All right. So I want to say thank you very much, wherever you are in the world. Please be safe, take care, eat healthy, exercise, no other excuse. Nikki, all yours. Thank you, Nikki. Let me just put a word in. This is Nikki that you're seeing. This started out as an experiment 3 weeks ago. Hey, Nikki, let's do a webinar. Oh my God, she's going to kill me. The amount of effort that Success Resources, there are people you've never seen, people behind closed doors who have been working 24 hours to make this happen. We've all had challenges. It's not Success Resources, it's the technology. So please, 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 just give them the gratitude, the huge thanks deserved, and he's helped put this whole thing together. But there's people that you can't see behind her, like the old saying, that stand on the shoulders of giants. So you've got Richard, Veronica, Audrey, Nikki. All of these people have been instrumental. Jonas, Faisal, Tumi from South Africa, Emmanuel. Everybody has been helpful here. So Nikki, thank you so much for helping to show this to the people. Thank you so much.
Thank you. I also like to thank Abdullah from my team and Jade and Rana as well. Okay, so guys, we'll see you next week. So have fun and have a good night. Bye-bye.